Good morning, happy Monday.
Happy Monday. Welcome back. A new week, a cold week. It's cold.
Really? I actually didn't realise that this morning.
I was walking in.
I was too tired to realise it was cold.
I was walking in and it is so cold. So I hope you're all staying safe out there because I haven't seen the generic headlines of, cold equals frosty fields equals, traffic jams and everything like that. But I assume it's coming. So if you're out there and it's cold, stay safe.
Welcome to the morning weather report with Luke Moore and Rich McDonald.
You can tell it's going to be a slow news day.
So what have we got this morning for you? Well, we've got Caleb and Terence in the gallery. I was expecting a little round of applause there. Yeah, that's more like it. How are you all? Good morning, Supersonic. Big week for the UK. That's right, the jobless data on Tuesday. Inflation on Wednesday, Lloyds on Thursday. Saw a horrible headline on Lloyds this morning. It tried to break out on Friday and then the Times have to go and smash it with a £1 billion fraud report that it's got to publish from years ago or something.
Friendly. Thanks for that one.
We'll look at that shortly. Dave G, good morning. Monkey Man, as always, the man who controls the... he's like the bouncer, isn't he? First one in.
Do we need to get him one of your little earpieces and just say, if your name's not in, mate, you ain't coming in?
Wait,
like this.
Shall we get Monkey Man his own little
King of the jungle, just sat there.
his screen? So we've got a cam on Monkey Man in the morning.
It's going to be like some kind of avatar, isn't it? Just a monkey doing this.
Julian, good morning. Donald, good morning to you over there in Ireland and Boise. How are you all? Good weekend. How was yours?
Relaxing, I'm going to say. I didn't actually do a whole bunch. So obviously Valentine's Day on Friday. So I did cook.
You won't want to hear I spent my Valentine's. But go on.
Well, no, I do now. Definitely want to hear. No, I was cooking. I cooked some steaks. There's a fantastic, if you've not been, there's a fantastic Portuguese restaurant in Fitzrovia called Lisboeta.
I saw the picture of that.
And Sam and I did a client lunch there mid last summer. And we both kind of completely fangirled because the head chef, he's a bit of a celebrity chef over in Portugal, came to the table and he's like, "Hi guys, how you doing?"
Really?
Cooked this steak with a sauce on it, and I've never tasted anything like it. It was incredible. So both of us bought the cookbook. In fact, it must have been. It was near Mother's Day because I bought it for my mother-in-law.
Okay.
We both bought the cookbook. He signed it, and I just had to call my mother-in-law last week and said, "Look, I need that sauce recipe." cooking it for the weekend. Yeah. And yeah, it's fantastic. So yeah, I've just been cooking and eating and walking the dog, really. Not much at all.
We'll have to see if we can get the picture of your steaks up because they were special. I saw that on your Instagram. You were boasting about your chef prowess.
I was posting about how good the steaks looked. They did look good, before I cooked them at least.
Well, I also had a bit of steak, but steak tartare on Friday.
Very nice.
Which was completely unplanned because I was just minding myself, walking home, recorded a podcast with a guy called Sammy Ellard King on Friday afternoon called Money Gains. And it was we had a great chat about S&P 500 and how so many people are being pushed into just blindly buying a tracker and think they're going to keep this tracker for 20 years. I said, okay, that's one way to do it. But then was walking home through South Kensington and I walked past a steak restaurant and who's sitting in the window but Pete Ward.
No way.
And so he waves me in and he's there with a couple of clients, wonderful guys. And I sit down and they say, "You got to try the steak. Have you had lunch?" "No." "You got to try the steak tartare." This thing was unbelievable. They come with a flame over the top and everything.
Do they prepare it at the table as well?
Prepare it at the table, yeah.
Nice. Yeah, that's nice. Was it the French style or was it, so they just kind of put the ground beef on the plate or did they make the dressing as well?
There was, the dressing on top. Will that be the French style?
Yeah. Well, because I've had it before where you kind of had it. As Fred
isn't so sure.
No, so I think the French style is it comes just with the beef and then you can add the dressing as you choose.
Okay.
Or it all comes pre-mixed up.
No, I'll tell you what was on top, blue cheese.
Ooh, sack me off there, no thanks.
Yeah, Fred's horrified.
Yours.
And then, but the client decided that we should all have some grappa, and then some limoncello, and then a beer, and then a red wine, And so poor Pete was having to get home to his missus for Valentine's.
Completely sloshed.
And he completely sloshed. But the client wouldn't let him go.
The client was you.
Yeah. And so then, so that was my unplanned Valentine's dinner. I was spending it with Pete Ward when I'd already spent the morning with him in here. I mean,
So and I imagine you just got home and just completely conked out on the sofa at that point.
Yeah.
Nice.
Yeah.
Strong. Very good.
That was, and then the girlfriend got home.
So she's back.
So she's back. She's back.
Away for a long while, isn't she?
And she got home to a German envelope, which, of course, had her voting form in it. So the German election on Sunday. And I've seen the form. We think ours is a complicated system. Theirs is way out and beyond.
Well, no wonder it's in the pits then, isn't it?
Yeah.
Blimey. I didn't even know that was this weekend. When do they announce results?
So it's as in Sunday coming.
Oh, Sunday week. Okay,
Yeah.
gotcha.
Yeah,
Gotcha.
Sunday week. So she's off to the post office today to try and get it guaranteed, or go to the embassy instead. And
Figured out. Lovely. Well, good for her.
shall we have a look at what's coming up on today's show, because it is a cracker.
So at 8:40, you've got Tweedledee. I don't know what, not Tweedledee and Tweedledum. We've got Ronnie and Minnie Cooper.
Did you know why I just called them that?
No.
Mate, that's unbelievable. I literally, when you walked off, I went and said, right, Tweedledee and Tweedledum. You're on at 8:30, 8:40.
Fine, 8:40 trade expectations. Then at 9:15, we've got a new, I didn't know, has Aisha been on before?
Aisha's been on once before with Angeline.
Okay, great. So Trader Tools with Aisha. And then at 9:40, we've got a market measures with Imran Laka, who I believe taught you options.
That's right. Back in 2005. So Imran is coming in and he's going to help me out with market measures.
Perfect.
And we're going to chat all days at Credit Suisse, and then he moved on after that to bigger and better things. But now also teaches. So
cool.
he's moved into the teaching side of things. So I'm really looking forward to that. It's going to be a good catch up.
That should be quite nice. And then at 10:05, you've got the General Axel Rudolph's coming in, technically speaking. So he'll be no doubt giving us his trade of the week.
The General.
The General, yeah. I mean, if you need to know anything about technical analysis, you go to Axel. I mean, if there's ever a person who can help you become less emotional or kind of less wedded to a trade, because the rules is the rules, right? And if you're setting something up, you're putting it on for a reason.
Yeah.
You're taking it off for a reason, and that's it. That's all that matters. I've learned loads. So yeah, you're in good hands at 10:05.
I quite like this new background.
It's lighter, isn't it?
Yeah.
I noticed that on Friday when I was watching it. It's definitely lighter.
So the good news is, everybody, we're moving to a studio that's got this incredible window background over the Thames, and with the sunrise, we've got the sunrise going on right now. Beautiful morning, and so we're going to have that in the background.
Oh, we're changing it on here.
No, we're not.
We used to have that.
Of course not.
We used to have a live camera on the back in kind of pre old McDonald times of IGTV. The background used to be a live window, kind of our view on that side of the office. So I'm pretty sure they had it geographically correct, kind of pointing due west. I think it's that way. And a bird sat on it once, and it completely ruined the show because it sat on the camera.
No way.
And no one noticed until it was too late.
God, fantastic. But what we are going to do today, while Tweedledee and Tweedledum are on at 8:30, I'm actually going to take a behind-the-scenes video. So I'll take you through from the back of the studio into the studio while they're recording. So if you're wondering what it actually looks like in here with our beautiful backgrounds, then I'll pop that up on the Instagram, the TikTok. Monkey Man's on the TikTok.
Nice.
You'll be able to see it. But yeah, I'm not sure whether to tell the boys I'm going to do it beforehand, because you can just imagine Luke Cooper, can't you? Turning round. What are you doing, Rich?
Well, you better hope they're not watching then, because you've just told everybody that you're going to do it.
We know they won't be.
Well, it's because there's a big space here, and I'm pitching that I need a place for my podcast. I need a podcast area. So we're kind of playing around with things. If you watched it last week, you know that we've now got a nice blue background. So we're going to be doing this, and a little sneak peek, we're going to be doing this week's Traders Talking Shop podcast live on air.
The idea originally was, I saw that they're doing Coronation Street live. do they do EastEnders live as well? So
don't know.
So I thought if they can do that,
we can do it.
You can do your top and chop.
You can tell it's an unscripted show, right?
Good stuff. All right. Let's go into overnight action and we will answer your question, Funky Gibbon. What should you do with your trades while you're on holiday? So I'll tell you the background of that, Funky Gibbon. When I worked at the hedge fund, I decided to run my positions over a holiday because I was only going up to Scotland, so no time difference, no problem. And we had the beautiful drive around Scotland, hired a Range Rover, camped out on a beach. Like it was unbelievable.
Was that the North Coast? Did you do the North Coast 500?
It was I'd still got to do that.
I want to do that as well.
Yeah. Different level. No, this was across from Inverness, Perth up to Inverness, across to Skye. Mm-hmm. And I was on Skye and had no phone reception, right? So this was 2008. And amazing night in Skye, langoustines, the whole shebang. Got back the next morning and I had 7 missed calls from my boss and a whole bunch of messages. And the British Aerospace had just been accused of fraud with Saudi and corruption. And so the stock was down 10% and I was short puts. And of course, British Aerospace it should move 2%, maybe 1% max in a day, right?
And it did 10.
And it did 10. So of course the vol exploded. The stock, so I was down $1 million in this one position. They were going crazy. What do we do with it? What do we do with it? And so at that point, I realized never leave positions open over a holiday.
Yeah.
Because it's going to go wrong.
I subscribe to, again, talking about Axel's way of thinking, you can trade with a stop. And actually, that's all you need, right?
Yeah.
So if you're intentional, I've always found that I've kind of battled with the right way to do this and the wrong way to do this. But if you're putting a position on, I now try and be really intentional about this is why I'm putting it on, okay? Mm-hmm. And if the idea doesn't come to fruition and it doesn't work, I've actually set my closing criteria before I put it on, really. And that helps, account size drives stop distance, drives position sizing, and it all kind of feeds into the same thing. But ultimately, if you get stopped out, it shouldn't matter, because it doesn't matter whether you're awake or asleep. That stop loss is in there to protect you. So it entirely comes down to whether you need to then put the position back on, you want to do some more work, if you've got to stay into a trend, or if it's a failed breakout or something like that, whatever that idea might be. But I would say as long as that stop is in place, you're in theory protected against it. Or you have other rules, like you don't leave positions on overnight if you're a day trader, or you leave things much longer. It's not like a hard and fast rule. I personally sleep better if I've got that stop on and just say this is the point at which I'm wrong.
I'm past that stage now. I can sleep no matter what. I'm old enough. Talking about failed breakouts, let's look at the Times this morning. Yes, Lloyds told that it is to publish in full a report on £1 billion HBOS fraud. Now, how many years ago is this from, Luke Moore?
Is this this is 2008, isn't it?
It must be, GFC, I would imagine.
Surely. Or maybe even earlier, 2007, I'm going to bet. A long delayed report into whether it covered up a £1 billion banking fraud. Because was HBOS Halifax?
Yes, Halifax Bank of Scotland.
Yeah, there you go. And so that then broke up into Halifax and Bank of Scotland became separate. Both owned by Lloyds or not? No, because they were no, I don't think they were. As you can tell, I was not in the market at this point.
Just a young lad.
Young.
So Lloyds has been accused of trying to cover up the affair, failing to cooperate fully with the police and of mistreating victims. It set up compensation schemes for those damaged by the scam and has taken 1.3 billion of charges related to the scandal. I mean, Lloyds has just been hit with charge after fraud. Now we're on the
car finance, aren't we? The most
car finance. Of course, got hit with PPI. I mean, it's
come off. I mean, if you pull up a chart on a fairly long time horizon, right?
Yeah.
It got killed in the GFC. So about the time that this all fell apart, and it used to be, I can't believe it used to be £4. So £4 in the early 2000s, then £3 at the peak, and then it got absolutely. If you go to monthly, it's because that's the only way you can see it. It got absolutely killed at that time, and it, in theory, it's never bounced back.
Yeah, for anybody who didn't trade or was, like Luke, a wee bit of a
back when Credit Crunch was just cereal.
Yeah, this time period here from the time period here from June '07. So June '07, we basically had a couple of months before Northern Rock blew up. And I remember, because I was on holiday in Dubai, enjoying the beach, and the front page headline was, Northern Rock to close, and the big queues out the back. Yeah. But you saw the quick demise of Lloyds from a price of £3 down to £2. Everybody trying to catch a falling knife at that point, because it was Lloyds.
Of course it was.
Nothing was going to happen to it. But then from June to towards the end of, the time of Lehman's going under, which was September '08, then by that point it was down to 65p, and of course the weekend that it looked like it was going under, it was down to 25 pence.
Yeah.
But it's not much of a recovery, is it?
No, it's not. And I suppose how much of this is news, really. If this is it's a report from the thick end of 15-20 years ago, how much of this is going to be price moving when actually when you're looking at a stock as an investor or a trader, you're thinking about what is it worth currently and what are its forecast earnings, right? Basically, what am I buying? And I'm buying an expectations of money in the future. And so unless there's any backdated fines or kind of recompense as a result of this report, it's just a story.
Yeah.
Right? If it's already been out
media.
there, it's just a story. Unless they then turn around and say, well, now you owe, X amount more because of the fallout or because of what you found. And you
or somebody gets sacked for it. I mean, that's the other things that comes from these, right? But
speaking of banks, though, did you see over the weekend? I think it was a term that was kind of bounded around last week. But the rise of the Magnificent 47. Did you hear that?
No.
This was the FT saying that if you look at the Euro Stocks banking index, just specifically the banking index, flying.
And there's 47 of them, isn't there?
There's 47 of them, yeah. And they were saying if you specifically look from 2022 to date, they've outperformed most markets, including the Mag 7. But then, so it was on the FT Morning podcast today, and the interviewer was fairly astute. She was like, right, okay, what if you move that 2022 date forward by 6 months or back by 6 months?
Yeah.
This guy was like, throws it out.
I've chosen my numbers wisely.
Chosen my numbers well, yeah. But the Magnificent 47.
A quick look at Barclays, actually, because Barclays are long remembered as the heroes of this time period, the ones that got it right, But from the same time period, July or August '07. You saw they dropped from £7. I remember Barclays being £6.50. They dropped from 7 down to 75 pence. These were the guys that got it right. They almost picked up and cherry picked all the best assets from Lehman for free. And you saw a really quick rebound there from March '09 up to from 90. From a pound, 95p a pound, up to £3.78 in the space of 6 months. I mean, what a rebound that was, but that's where they are still. It has been an absolute dead decade of British banking.
Well, you look at that now, right? You'd argue the pricing where we are now, you're breaking out, really. You look at those two peaks from, is that 2013 to 2015? Lower highs. Axel will talk to you about that later, but we're now seemingly attacking that 10-year resistance.
And you can see why people get so frustrated, right? Because let's look at Citigroup over the same time period. Like, these guys almost died, right? And that's the only one that comes closest to how bad British banks were. Citigroup. But if you look at something like a JP Morgan, these were the winners. And that's how I think of Barclays, right? But it doesn't really, it doesn't look like it when it comes down.
No,
you know,
but JP Morgan have
there you go.
become JP Morgan have become the BlackRock of banking, haven't they? Really, they've just own everything. I mean, was it?
But this is, can we just look at how incredible that is compared with
Everything
a
else.
Citigroup, Barclays, a Lloyds, you know, talk about, and this, remember, this is all the staff are getting this stock for working there. And I'll give you a clue, the Credit Suisse graph doesn't look too great. So the Credit Suisse were, again, the heroes of 08, 09, which Imran can take you through later. But yeah, that share price is now at one Swissy, as opposed it was at 14, whereas this thing's gone up 400%, is that?
Yeah, quite incredible, really, quite incredible. Not sure what else to say about it, really. It's just, yeah, let's hope that Lloyds doesn't get whacked on this story, and then start to reverse what has been a fairly strong sentiment trade for most of this year and last year, really. It's been doing quite well.
Shall we speak about Zelensky and Ukraine and Trump?
Yeah, well, let's talk about it, right? Because I came in this morning prepared to try and look at everything for the show, and then realised that it's President's Day.
Start off, guys.
Realised it's President's Day, so the US market isn't open. So
Yeah.
There's not much going on at all out there. But the only really news flow over the weekend was Geopolitical. And I said to you, and this is my take on it, you've got the people that matter are meeting in Saudi Arabia. So the US is brokering a deal with Putin, Trump and Putin, and then everyone else that probably doesn't matter so much, the UK, France, the rest of Europe are meeting in Paris.
UK are going to Paris as well, are they?
UK are going to Paris as well. Yeah, so you've got these kind of two meetings to try and hash out some kind of deal. So I think what's interesting for the Paris meeting is going to be defence spending.
Yeah.
Because I think they're going to have to bolster up. Everybody's worried that, you know, if there's some kind of any kind of give to Russia, that's just going to be the next step along the line of, you know, further annexing different parts of Europe. So that's the concern. And so Europe needs to, or that's at least what the meeting is about, is like how do we bolster our defences? So I'm interested this morning to look at the European defence stocks, because I think there's going to be a decent lift in them this morning. So you're thinking probably the Rheinmetalls, you're probably thinking the Safrans in France, maybe even the BAEs in the UK.
But no, because part of the negotiation is that Europe has to buy American.
Is that right?
Yeah.
Okay, well that's going to be interesting then.
So that's you know, that's what they want from their point of view.
Well, that's the US is saying that.
Yeah.
Well, that's fine for them to say, but actually they don't have to.
But isn't this thing all proof that he's in control and that Europe is just a joke? I mean, you know, these negotiations could have taken place 2 years ago. If Europe had any kind of power, they could have pulled Putin to Saudi Arabia and had talks about this. But it's taken Trump, and I'm not a Trump fan,
a month.
But he's clicked his fingers and that's it. Now there's peace talks going on.
Yeah. Although you'd argue that Europe will try to spend using their own defence businesses, right? So they're going to turn out and say, right, if we're going to raise our, you know, percentage of GDP that we're spending on defence, we will buy from that. That'll be some of their concessions to the US, because it's art of the deal across the board. So they're going to want to have some of their spending on their own companies, right? Trump can't have it all his way.
Yeah. Well, but then he just puts tariffs on.
He does, but he's also threatened that he's just going to pull all of his troops. So they're going to have to back up from somewhere.
Yeah.
They're going to have to spend some money somewhere. So look, it's going to be interesting. So what are the stocks? So Rheinmetall to watch, BAE Systems, Babcock to an extent.
I don't know much about Babcock actually.
Babcock build. Do they not build the jets and
Right.
bits and pieces?
It's purely me not knowing. Yeah.
So yeah, I think they're going to be ones to watch on the open. But yeah, we'll see how the story goes.
What about the company that's got the name of the place in Surrey, Cobham? Is that still around?
I think it probably is. Yeah, Kinetic as well. I think do as well a little bit. Although I don't think they've been doing very well.
Yeah.
So they're going to be ones to watch this morning, and a story to develop, because of course, you know, I'd argue that gold is probably trading.
Well, that's
as an edge on this.
Donald's exact question is there. Is it time to sell gold with potential peace on the way? Well, not according to the FT. So FT says it is the top Trump trade.
Well,
That's not easy to say, is it?
It has been. Oh, I think you've got the wrong screen up there, guys. There you go. I think it has been the top Trump trade, the top Trump's trade.
Yeah.
But it's pulled back this morning, so it's now back around its kind of 50-day moving average. Fortunately, back below my call strike level of 2,900. So it's back at trading 28.90. Not much.
Have you got a spread on, or?
Yeah, I've got a strangle on. So I've got a 29 and a 27.50 for April. I've rolled my puts up to be a little bit more attacking.
Andrew says, yeah, Babcock submarines. Yep. Unfortunately, submarines are the one that are at risk, because it's great to talk about all this defence spending, but every single Western government is broke. So let's all spend more on defence, on stuff that we can piss up against the wall.
Well, actually,
and fire into the air, but you don't have the money for it.
You've just reminded me, actually. There was reports, I think it was on Friday, where Trump is actually going to try and use this talk with Putin to lower defence spending.
Well, that
is a way to kind of get around this.
His aim is to lower defence spending, which means that hurts US companies.
Yeah.
So then he gets European to buy, and he keeps American companies strong.
So he's trying
profits.
So he's trying to lower his, because he knows
that's the end game.
When you've got the Department of Governmental Efficiency and defence is nearly as high a line item as the interest now, so they need to start to tweak things. Yeah, exactly. That makes a lot more sense.
Right, 2-minute break. We'll be back with you for the market open.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome back to Opening Bell, everybody. I have just spilt hot chocolate all over my hands because Caleb was giving me a ticking off.
Well, it's your fault. The kitchen's not 2 minutes away and to come back for hot
Exactly.
chocolate.
You've got 40 seconds.
Hang on, so I've seen you with a cup of tea. I've seen you with a cup of tea, a coffee, and now a hot chocolate.
But you said we're about to go on air.
Right.
We still had 40 seconds left. I'm spilling it all over myself.
Well, look, let's have a quick run through some of the headlines because we haven't really spoken about that at all yet this morning. Anglo-American are divesting their Amplats assets. So they've said they're going to get that done by June. They're indicating they're going to be up 1.2%.
Yeah, that's good news.
Fever Tree, they're beginning their £71 million buyback today. So that was announced when they reported 2 weeks ago. That's now, they're indicating up 0.5%. Springfield, so we were talking about Scotland a second ago. Springfield are a property REIT based up in Scotland. They've sold off £64.2 million worth of land to Barratt Developments. They're indicating up 9% because their market cap is only 112.
Wow, okay.
So one to keep an eye on, SPR.
And UK defence stocks up 3%. You're right. Press reporting Starmer to overrule Reeves and boost defence spending. That was in the Sunday Times yesterday. All your questions there, we will go through them in Fast Markets coming up in about 10 minutes' time.
we'll have a look at it.
Where's our bell?
Oh, it's here. It's here. How long have I got?
There you go. You got 5 seconds.
I've got nothing to read it with. Hang on. Let's go. Quick. We got it.
Perfect timing. Smooth, Lookmore, smooth.
We nearly missed it. We very nearly missed it. Right, what's out of the block? Springfield have opened up 10% on that news of the deal with Barrett's.
How's it already open?
It's a smaller cap stock, market maker.
Do they not have any?
I don't know if they do. No,
Limit?
so they've
Wow.
just opened them. Let me just see where Barrett's are.
Right, small recovery in John Wood after that shocking week last week, up 1.1%. Trainline up 4.7. Is that a funny print, do we think? Or is there some good news around in Trainline?
Well, full steam ahead.
Oh, very good.
Come on. It's
Come
a
on.
Monday.
Where's that deserved a round of applause at least. Well, okay.
Oh, come on, killer. Killer. So the top of the pops, as I said, we're not surprised here. BAE Systems up 4.5%, trading 12.81. Rolls-Royce up 1.7%.
And Lloyds doesn't care about this Times story. Up 25 basis points. I'll take that. I'm quite happy with that one. It just looks so primed and ready to break out. It's the eternal dream in something like Lloyds, isn't it?
Well, you can look at all the other banks, really. They're all pretty well correlated to each other at the moment. I mean, they've all just been breaking out for most of this year. You'd argue that maybe NatWest is the underperformer so far compared to Barclays and Lloyds, but all opened up green. We've got HSBC as well up 0.5%. So yeah, good start to the week from the banking.
Right, the losers are the home builders. So British Land down 1%, Hammerson down 1%, JD Sports down 1%. A lot of that seems to be incredible for the size of it. It's a one that a lot of people play, isn't it?
That's right, it is.
Burberry, Land Securities, Flutter down 2.5%.
Burberry clearly down because I bought a scarf from there.
And Vodafone, we didn't look up. Let's get our daily update of how many shares of Goldman Sachs bought on Friday.
Oh, what on voters?
38 million. So they've clearly got a seller, because there's no way that a stock drops 2.5% when you're buying 35% of the volume. So Vodafone down yet again, clearly a big seller in town. Who is it? Who is that big seller? Is it? Are we getting rid of the French guy eventually? And I don't mean producer Fred.
What was his name? I can't remember.
The one that's got the company trying to steal away the Italian assets.
Yeah, I don't know. Well, maybe. I mean, they're not buying back. How much of the company have they bought back now?
A very aggressive seller that Goldman's are taking advantage of to match off in the buyback clearly. Then, down another 60 basis points this morning. So that's one to watch.
What else is going on in Europe?
Europa, there you go, you're spot on. Oh, thank goodness I closed that. Oh my goodness.
Short of Rheinmetall.
I tried to have a short on Thursday and it lasted about an hour because it just went right up in my face. Not the best trading week for me last week.
No. Or what we haven't spoken about as well is the Intel news, actually, over the weekend, because the US market closed. We haven't spoken about it, but let's speak about that in just a sec once you've raffled through the few.
Well, go through that in fast markets, shall we?
Yeah. But yeah, we've got BNP Paribas up, I suppose, lagging the banking sector. SocGen, Deutsche Bank. So yeah, European banks and the UK banks are doing really, really well. Have we missed a story? Because that is a very strong performance from the banking sector as a whole across Europe, apart from people getting pumped into it by the FT calling the Magnificent 47. Not sure about that at all. Springfield now up 13.7 is on the smaller cap side. BAE up 5, so holding those highs. Let's have a look at BAE.
Yeah, Barclays up 1.7.
Flying. My client of mine that I keep telling you about that calls in every morning to trade the banks will no doubt be happy. Hopefully he's got a position on. Hopefully he's right.
Fingers crossed.
So.
Yeah, Rolls-Royce, that's right. So Funky Gibbons saying still seems to be booming. Rolls-Royce, of course, part of that defence sector spending that could potentially benefit. So, up 1.7, 635. That is
I've got to say, actually, Funky Gibbon
new
got
highs,
it.
isn't it?
Funky Gibbon got the better train line gag there, on the right track.
Did I miss that completely?
I think you did, yeah.
Oh, dear.
I think you did. Missed the signal, one would say.
Oh, didn't miss that one. That was a cracker. There we go. Yeah, so a gap up. Rolls-Royce previous high 631 intraday, trading 635 already. So, defence sector, government's got so much money to throw around on defence. Apparently, said nobody ever. Entain and Flutter both down, so that's one area of weakening. Maybe governments are thinking about putting more tax on gambling to pay for their missiles.
Yeah, maybe. Well, I don't know about those because I think they were moving last week because of the decent numbers surrounding the Super Bowl, weren't they? So whether there's just a bit of a follow through from that. I mean, Entain's been doing really, really well this year, up from 660 to 770 in a week as a result of that.
Yeah.
I'm not really surprised to see them give a little bit back. Entain itself, if you just look at a chart, if you look at kind of like a 3 or 4 hourly chart, pull that up, it is at a decent point of resistance from the start of Feb. So if you maybe just
3 hour chart. There we go. Yeah, you're right.
It gapped down. We've now filled that gap in, and we've just got to wait for a breakout above. And is Entain the larger of the two? Let's have a look. Because I know.
Because they've all renamed, doesn't it? So Flutter was Betfair, Paddy Power.
Correct.
Entain was Ladbrokes and Coral.
Coral or Bill Hill?
No, I think. Yeah, William Hill and I don't think William Hill and Ladbrokes got together.
Okay, so
did
I've got it here. Flutter are Betfair, Paddy Power, Sky Bet Gaming, and FanDuel, which I know is becoming very, very popular. And Entain are
Ladbrokes.
Bwin, Coral, Ladbrokes, Party Poker, and Sporting Bets. But Entain is
Did
tiny.
William Hill just stay alone?
I guess so. Not its own stock. No, Entain's tiny. Well, not tiny. 4.7 billion compared to Flutter's 47. So,
wow,
that's massive actually. But Flutter, of course, now trade on the US stock market as well, not just the UK stock market. 42 billion, excuse me.
And how has their performance been since moving to the US? Is that
That's the London line you got there.
the recent uptick?
When did they leave? They left. I want to say they left, or not left, but they relisted over there. I want to say kind of spring, summertime last year.
Last year. Right.
Yeah. So I wouldn't be surprised if it's that gap there. You see the.
So up 50% since. You can see the attraction, can't you? In the meantime, we've got Shein, who have not only delayed their IPO, but now talking about reducing it to a market cap of 30 billion.
Yeah, actually, thanks. Wardy's just messaged me. Sorry, 888 Holdings own William Hill.
Ah, right.
Thank you for the assist.
Pete Ward watching the show.
Look at that. Well done.
Get back to work.
Yeah, get back on the phones. So we are fair play. Okay, so
right. So defence really the
defence is the
story of the morning.
Yeah,
isn't it?
defence is the story. Do we have any details on when this meeting is going to be coming through? Because that'll be timings and headlines will be the ones.
The important one or the one in Paris?
Well, probably the important one. What is Trump himself going to Saudi? Because I believe it was his defence secretary that was going across.
Ah, yeah, because this isn't Putin and Trump, isn't it? This is to make way for Putin and Trump at a future time.
Yep, 100%. Let's see if I can get any details on that.
Yeah, James Bennett, we're definitely going to address both your points because very good points they are in the comments there. We're going to look at the prospect of gold. We're going to do that in about 3 minutes' time. Mm-hmm. And then also we're going to look at Nvidia as well. Nvidia, how is it doing after people collectively losing their minds over a Chinese company they'd never heard of at the start of the year?
Do you know what I find incredible on that as well? In fact, we can do it in fast markets. I'm a big fan of Perplexity. Have you used Perplexity?
No.
So it's an AI, I want to say it's like an AI aggregation tool. So you can add it on, and I've got it here as a Google Chrome extension.
Right.
And it just pops up a little box. You can type in whatever you want to type in, and it will then just do it for you.
Like, what company is bigger, Flutter or Intraday?
Well, no, I was writing this morning's text that I sent out to clients, and the formatting, I quite like my headlines to be all in bold. Yeah, the ones I was lifting it for were not in bold. So I just dumped them in there and I said, capitalize all of these. And
Brilliant.
just does it like silly things.
Yeah.
And it just makes it so much easier.
There's
But they
things
can
that-
aggregate, so you can pick. If you I think you get 3 or 4 pro searches per day, and you can pick the model that you want to use. So you could use DeepSeek's model if you wanted to.
Oh, right.
Or you
Wow.
could use OpenAI, or you could use Claude. So
Without giving away all your Gmail to DeepSeek.
yeah, it's nice. It's nice.
Good. Well, yeah, so Tencent now up 4.5% overnight, adding DeepSeek to one of their apps.
Yeah, there you go. And it's really cool. I'm geeking out about it. What I like about the DeepSeek model is it tells you what it's thinking.
Yeah, but
This is really
OpenAI
cool.
started that this weekend.
Have they?
Yeah.
Okay. Yeah. See, look,
Yeah,
people,
ChatGPT.
they're just going to copy each other's homework.
Yeah.
That's how it works.
Which is great for us all.
Yeah, great.
I mean,
for
20
us.
quid a month, and literally the work that OpenAI does for me is beyond.
Yeah. Well, this is what we kept saying. Kind of once the dust settles on, what was it, 2 or 3 weeks ago now, with Nvidia falling out of bed.
Yeah.
Once the dust settles, it was a good thing for people like me and you and the users or the builders of that software layer. So everything that we were talking about before Christmas, that this year is going to be the kind of broadening out of people using AI.
Yeah.
DeepSeek's changed the game, and it's forced Sam Altman to rechange his model so that he's doing the kind of reasoning piece as well.
One thing I was chatting about in the podcast on Friday. So if you've got £10,000, right, to start your investment journey, then that's great. You put that into the S&P, but realistically, on the average returns, it will be a 10% return. So you're only making 1,000 a year, right? So that's tough for people to get in the journey. There's now a company that has decided, right, we're going to help people and we're going to lend them, say 50%. So you put in 10,000, you borrow 10,000, and then you put that all into S&P tracker with them,
So you now make 2.
and your collateral is the stock.
Okay.
If there's anything that has rung the bell at the top of the market for me, that's it.
Yeah. That could be
Borrow money at what is it?
4.5% rate ish.
No, it's 6%.
Oh, they're charging you a markup as well.
They're charging you the markup, so you borrow at 6%, plus you pay £400 to set it up, right? Plus you pay 0.79 management fee per year for an S&P 500 tracker.
I'm just trying to think now about how you could. Well, you could use a spread bet account to do exactly the same thing.
Exactly.
You get more leverage, so you're accessing more capital.
And tax-free.
And it's tax-free. And the cost isn't a million miles away from being the same, and you get access to. So retail clients would have to pay 5% margin, 20-to-1 leverage. So a £10,000 investment can in theory buy you a lot more. So I wouldn't recommend that. But yeah, that seems.
So I worked.
You're sneaking leverage into people's portfolios.
In a way that you're posing as almost you're letting them lead their path to financial freedom, and you're charging them 7% a year. So I worked out, and this is why the whole point was I used ChatGPT to work out, okay, if the S&P only goes up 3% a year, like Goldman's have predicted, after 10 years, guess what your return is?
Post cost.
Post cost.
It's going to be like after 10 years, so 10% compounded down, but a lot of that's going to be taken away. Sorry, 3%. I mean, I'm going to say 15. Wait, we're saying you borrow the 10 as well. It starts with 20.
Yeah.
27, 28.
You lose £300.
You lose £300. You don't make anything.
Don't make anything.
So that's why they're doing it then. That's why the company is offering
The company
cash.
makes all the money. If the market goes down 10%, you're down 31% in year one.
Quite incredible. Yeah, as away from numbers, like UK housing shared ownership.
But people don't realize they're signing up in droves. They borrow, lend me money, because the S&P 500 only ever goes up. Ring the bell. That is the top of the market for me.
But they've been saying that for a long, long, long time. There is always a bear case.
Yeah, but you've never had somebody offering to, every man on the street that's 21-year-old, and just because of that collateral, the lending standards are going to be a lot lower, right? Because you're talking about S&P going down 50%.
Yeah,
that's really worrying for me.
The S&P is not going to go down 50%. I just don't think it is.
Yeah, but you hope not, because then you're completely wiped out.
Oh yeah, completely. Yeah, but I just don't think.
But it's the wolf dressed up in the sheep's clothing that I don't like about it.
Well, yeah, the fact that they're not probably as upfront about those costs and what it means.
Oh, it's in the small print.
Oh yeah. But I compare that against. Have you seen our smart portfolio product? So we've got a managed portfolio product in partnership with BlackRock, right?
Sorry, you mean with Martin Harris's
with Martin Harris's business. Yeah. And I don't think we shout about it enough.
Yeah.
For one, because I think they're very high quality portfolios. But on the front page, it tells you exactly what your expense ratio is going to be. It tells you exactly what the management fee is going to be, and then you can run a simulation to say, right, well, this is the expected returns, how it's been across 40 years. This is what it's going to look like, and we tell you exactly what it's going to cost on the front, because I think it's important. Too much. We're going on a bit of a rant here, but far too much of the financial landscape is hidden fees and not being transparent, and I don't like it.
And Neil makes exactly a great point. Away from the numbers, scary, just like the UK housing shared ownership.
Yep. My pal got stuck with that.
All these ideas to put more credit on you, more credit.
Yeah, and the scary thing about the shared ownership is if you try to sell it, the person that my buddy of mine got stuck with the Help to Buy scheme. So we had a new build. So we bought it using, I think, whatever the difference is, the government lends you against your deposit.
Yeah.
But when you come to sell it, it's now not a new build because you are the first owner. It's now there's a second owner. So someone using the Help to Buy scheme can't buy it from you.
Right.
And so you're stuck either having to buy out the government for their deposit or having to sell it, but you're probably going to sell it at a bit of a discount to what you bought it from unless there's been a move in the housing market because it's now not a new build. So it's tricky because that segment of the market that you use to buy your property, you can't feed it back into that pool of buyers. Difficult.
Don't even start me on student loans, by the way.
Oh, it's a tax. It's a tax on ambition. I hate it.
Yeah. Anyway, right. Let's enough of our little rant. God, what's happening with the world? Let's go into fast markets. Right, this is the section of the show where we take all your comments that you've been popping into the chat for the past 20 minutes, and we look at, well, first of all, what do we think? Is that a position that I've got? Would I put it on? Would I swap it into options? First thing I walked into this morning, Luke said, "Good morning, have you seen the Intel news?" And what did I repeat?
No.
Well, no, but it's because I'd sold my option.
Oh yeah, you sold your options last week.
I've had a call option for 2 months, which was a February call.
Yeah.
And therefore, I took it off on Thursday because the stock had moved over 25%. And so I've sold the call, took the profit, and then...
Well, this is the interesting thing, right? So I must admit, I didn't watch on Thursday, but I did watch on Friday. So I didn't hear, I must have missed it if you were chatting about it on the show. But Intel bounced 30% last week. And at least from the discourse I was reading, there wasn't a huge amount of reasoning why. It was bouncing, and most of the market was doing well. But Intel got an absolute rager on from Monday.
Is that a technical term?
Yeah, look at it. So the news of the weekend is that there is discussions separately, I'll note, between Broadcom and TSMC, Taiwan Semiconductor Company, to split up Intel.
Yeah.
Now, Broadcom want the chip design business, and TSMC want the factories. And I think this could be a really interesting story now because Trump's coming in. TSMC, I don't think he's going to want a foreign owner of domestic factories, for one.
Yeah.
But there's been a whole backstory here. So Intel were massive beneficiaries of the CHIPS Act last year. So under Biden, they picked up, I think it was $7.86 billion last year in direct funding from the CHIPS Act. They'd also cut 15% of their jobs last year. So they are difficult. I think it's a difficult deal to do. I think Trump's going to use it to say, you know, TSMC, you can have it, but you've got to re-domicile in the US. So it might really work for him because, you know, he wants to bring all of his manufacturing back on shore.
Yeah.
It's going to be a story to watch.
It's
a shame that the US stock market's not open today because it'd be really interesting to see how it trades off the back of the story.
God, we're going to have to wait a whole day for it.
I know.
Yeah, so there we go. So yeah, great. Hold the call options for 2 months, and then 48 hours after selling them, we get this story.
What price did you sell them at? Or when did you come out of stock?
So it was the 22 calls, and I sold them for 280.
22 calls. Where's the stock?
23. Was that right? Did it go up to
23.60?
Yeah. So they were trading at 24.30, and I sold the equivalent of 24.80. So not the end of the world, but if it's up 20%, then I'll be peeved. Let's see.
Yeah, let's see. But I mean, look, I'd probably say your ceiling is that peak back in August. Where was that? As an initial level to keep an eye on.
Yeah.
Yeah. Where's that?
Yeah, 26.
26. So what's that? That is
that would make
8-9%. That's 8-9% from where we are.
Yeah.
Let's see. It depends on what the value is, right? If TSMC is saying that they want to buy the plants, that'll be one thing because you'd argue they're just going to bring all of their IP across. Yeah, Trump might like that actually. I don't know.
Right, fast markets. Gold. Is it time to sell it? Is there a chance that Elon pulls off everything that he preaches in the Oval Office, that he's only doing it for the love of America?
Did you see the story? I don't know if it was a story or a kind of series of tweets over the weekend, but Zero Hedge ran an article about Fort Knox.
No.
Did you see this? So Zero Hedge said that, you know, there's supposed to be, and I don't know what the number is, X amount of gold in Fort Knox, okay? And Zero Hedge said, ... is there? Just ran like a really kind of question. He was like, when was the last time someone looked at it?
Did Goldfinger actually get away with his...
Who's Goldfinger?
Do you not, when they broke into Fort Knox and they put the gas over everybody and they stole the gold?
What, James Bond?
Oh no, they didn't steal it. They were going to make it all a nuclear reactor.
So basically, Zero Hedge have questioned. They just said, look, when was the last time this was audited? And apparently the last time it was audited was sometime in the 70s. There have been spot checks, supposedly. But Elon got note of this. And he just went, you're kidding me. He said, no one's actually looked. And then there's a few stories just circulating that potentially there's going to be an audit of gold. Now, this could either be a great move or a terrible move, because if it's not there, what does that mean? If that gold is storing however many percent, you know, worth of gold, and that's what's underpinning the dollar, that's what's underpinning all the kind of value, and if it's not there, that could be really quite dangerous. So I wonder what they're going to do with it.
Well, they'll look first, and then they'll decide whether they're going to tell people or not.
Yeah, pretty much.
But yeah, look, what happens if this is the thing. My bull story on gold for years has been the US debt problem, right? And this thing, the reason that it's up more than the NASDAQ is in the last 18 months is because gradually people are cottoning on to the fact that the path of debt is unsustainable. Maybe the debt level is unsustainable, but certainly the path of debt is unsustainable.
The path of being interest repayments.
No, so that's
the expansion.
The expansion and the constant budget deficit. If you can, but there's no way that Americans manage to cut the budget deficit down to zero and then don't re-lever and go again, and they you know, more spending, tax cuts. If they make the savings, they'll cut taxes. So I still see gold as a you know, 3,500 over the next 18 months.
Yeah, well, we've got. I don't know if have you ever seen Signal Center on here?
No.
Well, on the. You haven't got it on there.
This is on the platform?
Yeah, it is, yeah. So maybe it's not on the CFD side, but if you click on, see below news.
Signals.
Yeah, signals. you can have a look in here. And so we use a couple of different providers, PIA First and Auto Chartist.
Oh dear, what am I accepting here, Luke Moore?
Yeah, there you go. And so now you've got a few kind of very short-term buy signals firing off today. So that dip, at least from a technical perspective, is being suggested to be bought on a short-term time horizon. So they're looking at kind of intraday and short-term time horizons. This is actually really cool because it tells you...
Is this Axel in an app?
This is RoboAxle. Yeah, this is Axle pre-Axle. PA First and Auto Chartist claim to be, you know, very, very high quality signals. The tricky thing is you need to see them as they fire off. So they're very tricky to kind of to completely use, but I like to use them to give questions like that a bit of context. So, you know, is it time to sell it? Perhaps not. It depends on what your time horizon is going to be. But they've given reasons here. So spot gold, they've got a 60% confidence in an intraday buy signal, stating that there's been a morning doji star formation with support at 28.95 and resistance at 29.05. So they're playing for a 10-point move. So yeah, I mean, that was posted about an hour ago, that one.
Yeah, I mean, look, everything can pull back, right? And it does. Natural trader instinct to me feels like it's gone too far too fast. And I wouldn't be surprised at all if we trade 2780 again, something like that, 2780. But, you know, this is on a path towards, you know, if suddenly we're going to spend more on defense spending, you know, then fiat currency is just blown out the water again.
Yeah.
Right, Nvidia. It is a US holiday, so, you know, there's no point in talking about it too long because nobody can trade it today. But are the fundamentals intact?
When do they report? I think it's difficult to know, right? The fundamentals are still intact as far as I'm concerned, because a lot of the reasons why they're able to project such huge earnings growth is because their order book is so backed up, right?
Yeah.
I think they've got like 18 months worth of back orders to fill. Does that change is the question that everyone's asking. Because of DeepSeek, because of the purported 95% less compute that it requires, does that change the scenario for them on an ongoing basis? And I think, well, the market didn't know that, which is why everyone came out of it. But I'd argue the way that it's traded since, the market's fairly confident that it doesn't impact it.
Yeah.
I'm just going to let the price guide my view here because, you know, it's pulled back 20% off its highs, got bought up really quite strongly, and it's back in the middle of its range for the year now.
I mean, looking back 12 months, this thing is trading 120 to 140. And every time it goes to 150, you take profits. Every time it goes down to 110, you reload. You know, it's a 120, 140 stock, which is right, because that's what, 2.8 trillion to 3.3 trillion market cap.
Yeah.
And that's what it is, because it can only make $5 of earnings. And so, you know, what's 140 divided by $5 of earnings, 28 times, it's on 28 times earnings at you know, peak.
Donald's medged its next Wednesday, the 26th.
Excellent. Ooh, big day. Right, we've got two colleagues banging the door down in the background. Do you know what treat you're about to get, people? Ronnie's first time hosting the show. Ronnie, for you today, is the new Angeline.
The glamorous assistant, Ronnie.
Yes, Ronnie will be calling you trader friends. He's all ready to go. He's going to have an earpiece in.
Is he?
So you just try and guess every time that there's somebody in the gallery speaking to him, because he's going to, you know.
Hey, I can't do this because I'm hosting. I'm in Rich's seat tomorrow with Will McCreary. So I'm not going to say anything about hosting with an earpiece in, because I can't lie, I'm a little nervous about it. I've got to see how it goes. So look, Ronnie, I wish you all the best, mate. Let me know how it goes. Come and see me afterwards.
And don't tell them, but I am going to be sneaking in the back to do a behind-the-scenes footage. So have a look on your Instagram stories, Markets Live IG, Markets Live IG, and TikTok as well, Markets Live. And you'll see that behind-the-scenes footage. It will be up within 20 minutes.
Good. Cool.
Right.
Guys, enjoy. See you later.
Get the bleeper button ready, Boise says.
me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the Close button next to the relevant trade.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investment. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Welcome back to Trade Live with IG, trader friends. And I know what you're thinking. Hold up, what's happened to Rich? And why is he all of a sudden tall, dark, and handsome? Don't worry, trader friends, your eyes are not deceiving you. Ronnie Agnig, has been taking over the show together with my brilliant colleague, Luke Cooper.
Thank you very much, Ronnie. How was your weekend?
It was brilliant. It was brilliant. How was yours?
It was good. Did a little bit of cooking. Did my famous carbonara on Sunday.
The famous recipe that I'm yet to experience.
I'll have to show you sometime.
Yeah, I look forward to it. As long as we don't have a battered sausage, I'm happy with it. So, Luke, a lot of stuff going on. US markets are closed today. However, you and I have a lot of stuff to talk about.
We do.
Because you and I, we've been in this role for quite a few times. We've been in the customer service, and now we're on the premium desk.
We started together in trading services.
Exactly. So believe it or not, started from the bottom, and now we're here. So Luke and I are going to talk a little bit about sort of costs and how a client can trade in the most cost-efficient way for the IG. So if we just kick us off with indices, Luke.
Yeah.
What would you say is the main sort of difference between cash and futures in indices, and what does it actually entail? Because I see the two different ones on the platform. What does it mean for me as a client?
Sure, yeah. So would it be okay if we just bring up the platform so we can walk the clients through it?
Got it up here.
So, perfect. So at the top there, you'll be able to see for indices, we've got the FTSE 100. You will have cash, futures, and options.
Yes.
Right? Okay. So an option is the right but not the obligation to buy, sell a market at a specified point in time. Okay. Now you've got the future there, which is the obligation to buy or sell a market at a specified point in time. Okay. So the difference between the future and the option is the right but not the obligation, and the future is the obligation. And we also have the cash contract there as well. Now, with the cash contract, you'd notice how there isn't an expiry. Whereas for the futures, if you click on futures for me, please, Ronnie.
Yeah.
And then go to the info section, you would be able to see an expiry.
Oh. There we go.
There we go. Unfortunately, as you know, I've got dodgy eyesight, so I can't quite see the expiry from here. Would it be okay if you just tell me what the expiry is?
So I'll zoom in for the rest of you at home.
Okay. So we've got the 21st of March of this year.
Yes.
10 o'clock.
You're right. You still got it. So what's the difference between, so you told me a little bit about the different sort of obligations that one has trading the futures versus the options. Cash doesn't have an expiry. What does it mean for a client in terms of cost when trading between the two?
Yeah. So that's the one thing I really want to focus on today is the cost for the client. So on the FTSE 100, of course, you can go long and you can go short. Now, when you go long on the overnight funding, you will pay, okay?
All right.
At the moment, because rates are higher. If you go short, you'd receive, okay? Now, you'd actually be able to see this on when you place 10 trades or more. As I'm sure many of you know, you have trade analytics.
Right.
Right. And when you place 10 or more trades, okay, then you can actually see your trade analytics. And what it will show in the trade analytics is it will show you that if you trade on the cash and you go long and you hold that position between 5 and 7 days, it will give you a little heads up indicating that you should actually be trading the future contract. The reason is because we have a lot of clients, let's say they want to go long on the FTSE 100 and they want to hold it for 6 weeks, as an example. You would actually be better off trading the futures contract than the cash contract. Now with the futures contract, you'll notice there is a slightly wider spread, okay? And this does actually take into account the overnight funding. Whereas if you trade the cash contract, and let's say you go long on the FTSE 100, then what you'd see on your ledger history is that if you hold the position past 10 p.m. UK time, of course, each night, then you will actually pay for that position. And it actually works out worse if you do want to hold it for, let's say, like the trade analytics says, greater than 7 days. You're actually worse off if you're going long on the FTSE or the NASDAQ if you hold this position for a long period of time.
Absolutely. And that's something that we always tell the clients, right? So if you're looking to take a short position for a longer period of time, feel free to trade the cash because you'll get the overnight funding paid out to you. You collect funding. But if you're looking to trade a position for a longer period of time, the future is the most cost-efficient way because yes, you pay a little bit more in spread, but you don't pay overnight funding every night if you intend to keep it open.
Exactly. It's just that slightly wider spread at the start.
Yeah.
But
And obviously this varies between the different markets.
Of course, yeah. One thing to note on that is you've got spread in hours and out of hours. So on the FTSE, so in the UK main session between 8 and 4:30, you'll notice how our spread is 1 point. Whereas if you look out of hours, then it could be 2 points,
Yeah.
or 4 points, depending upon the time, of course. Because with the FTSE 100, we offer that overnight, and it's one of our weekend markets as well. So you notice the spread would be slightly larger there than what it would be on a Monday to Friday between 8.5, 4, which is 1 point.
Absolutely. And what happens with your futures position once the contract expires? Because we said the futures contract has an expiry date, right?
Of course, yeah.
So what happens with my position when I've bought it and then I've held it through the expiry date? What happens then?
Sure. So you noticed earlier how we looked in the expiry section and we saw the expiry date for the contract.
Yeah.
So what we have here at IG is we have something called rollovers, which you can enable from your side if you go into My IG and then settings and then rollovers. And what you can do is if you do want to keep that contract for, let's say, long FTSE for, let's say, a year or something like that.
Yeah.
Then what you'd need to do is you would need to enable rollovers in the My IG page. Now, what would happen on expiry? Let's say if you had a long position, right? If you had a long position in the FTSE, what would happen on expiry is you'd be closed at the bid price and then reopen at the ask price on the new contract. So any profit or loss on that position would be realised, and then you'd have a new position on the FTSE 100, but just on the different contract. Now, if you didn't enable rollovers, then what would happen is your position would just expire.
Yeah. But it's also worth mentioning that rollovers are an auto-enabled features. So the default setting is that you have rollovers enabled, and then it's only if you actively go in and change it or call us or ask to change it. So by default, your position will roll over in infinity, if you will.
Unless, as you say, unless you change it on My IG on the settings page.
And then look, is this only on indices, or is this something that clients can do on stocks as well?
Yeah, so you'll notice how if you go on shares, you'll have forwards. Now, in general, well, obviously there with FTSE, we've got futures. As I said before, a future is the obligation to buy or sell a market at a specified price at a specified point in time. So is the forward. However, the difference in general between forwards and futures is that futures trade on an exchange and forwards trade OTC, like contracts are more customizable.
Yeah.
Now with us, what you'd notice is under the shares forwards, it's only on a spread bet account. So we don't do shares forwards for CFDs.
Yeah.
So as an example, if you went on a CFD account, you wouldn't see that option there, whereas you would for spread betting, okay? Now, in general, for shares, if you're going to go long on, let's say if you're going to go long on BP, right? In general, for shares, it's around 2 weeks. If you hold the position for 2 weeks or greater, you would be better off trading the forward than the cash contract. Because just like with indices, if you hold shares past 10 p.m. UK time, assuming you're trading the cash, you would be charged or receive overnight funding.
Yeah, and so obviously you have the cash position as we see with the spread of 1.09, and then we have the forwards, and then the further expiry I take, my spread expires, right?
Correct.
So could you tell me, Luke, what's the benefit of actually trading with a further expiry or taking a shorter expiry with cost in terms of long-term trading in mind?
Sure. So there you'll be able to see the forwards, and as Ronnie said, you can see the forward which is further out has a larger spread, okay, due to interest, right? It takes
so now we're out in the September one. So now we're paying to hold this all the way until the expiry in 16th of September. So we're paying 5.89 points in spread.
Yeah, so that's how we price a forward, okay, with the interest expectations, which is why the further out the contract, the greater the spread. Now, if you were going to hold it for a prolonged period of time, let's say I use the example of a year before, let's use it again, then you'd be better off trading the forward contract, which is the furthest out.
Yeah.
Interesting thing there. I know we discussed this earlier, but you know on the deal ticket how you get an indicative cost.
Yeah.
So if you just put in, let's go back to indices. Let's say FTSE 100, and let's just keep it simple. Let's say, should we say FTSE 100 long?
Let's do
£10 a point.
£10 a point. Big trader you are.
And then look at the view full cost details. So what that displays there, again, my eyesight is very poor, so apologies. There we go. We've got the total opening closing costs and the daily running costs of the position. So that total daily running costs shows you how much it would cost you to hold that position past 10 p.m, which is the overnight funding.
Yeah.
And then, so that's long. Now, if you did short, would it be okay if you show the viewers what would happen there?
So if we do short and we switch it.
You receive.
Yeah.
Yeah.
So you get paid 4.76.
And you receive less than what you paid due to the fact, of course, there is borrow costs, which is the cost we pay for clients to enable them to go short.
Effectively, yeah. So basically, if you're looking to trade for a longer period of time, if you're looking to hold a long position for a long period of time, no pun intended there, then a future or a forward is the most cost-efficient way to do so. You will, however, of course, realize the eventual P&L at the time of expiry, because we'll close your position and reopen in the next contract.
Yeah.
But beyond that, the benefits are that you don't have to pay every day. And you're allowing yourself to take a longer term view in a more cost efficient way.
Yeah.
But if we're moving on from the accountancy talk of costs and overnight funding.
You love a bit of accountancy talk,
We
right?
do love a bit of accountancy. I do have a degree in it, so I'm trying to move away from that. So today, as we said, the US stocks are closed today because of the President's Day.
Yep.
But we do have something that's called all session stocks, which the trader friends are well aware of. But so these sort of all session stocks, what makes them what differentiates them from a regular US stock, and how does this work in terms of non-lev traders as well, just people trading on their share dealing?
Sure. So at this current moment in time, we have around 100 all session stocks available on the platform. Now, these stocks have a greater market cap in general, but in addition to that, they have more liquidity as well.
Yeah.
So what that means is on the platform, of course, you can't today, as it's President's Day in the US and the markets are shut. However, what you'd be able to see, so let's say tomorrow at 9 a.m, you'd be able to see these 100 stocks, so Tesla, Amazon, those more liquid stocks, of course.
Yeah.
And you'd be seeing them on the platform, and you'd be able to trade them from 9 in the morning. Whereas those stocks which aren't as popular, don't have as large as a market cap, then you'll be able to see them in the US main session, which is from 2:30 to 9. Okay.
Right.
Now, there you touched on leverage and non-leverage.
Yeah. So let's say I go into a trade and I wanna trade it. Let me switch to my share dealing account. Now, obviously, we can't place the trade today because of the President's Day.
Yep.
But let's say I would like to buy some Tesla stock. I want to buy the dip. I think what Musk is doing is terrific. I love that he's getting involved in politics.
Taking over the world.
Yeah, I very much enjoy it. If there's a right-wing party, he'll support it. The more extremist, the better. And that's just my ideology. So how can I, as a big Doge fan, big Elon fan, how can I buy it, Tesla stock, before the market opens on my share dealing account, or place an order to buy?
Sure. So with our all session stocks, on leverage, you can trade it 9 till 1, Monday to Thursday. Okay.
Yeah.
So we do the pre-market and the post-market. Okay. Now on leverage, if it's not on all sessions, then you can just trade it on the platform in the US main session, which is 2:30 to 9. Now on non-leverage, which is what you've got there on the platform, you can trade it between 12 and 10:30 Monday to Thursday
and 12 and 10 on a Friday.
Right.
However, one thing to note is that if you did want to do this and you want to do it in the pre-market on non-leverage, so that's between 12 and 2:30, so in that 2.5 hour slot, then what you need to do is you need to do a limit order, so to buy at a lower price, and you need to set the expiry to all sessions. Okay, so if you didn't do a day all sessions expiry, which is what's required.
So this is where we can see. So let me zoom in for Luke and Fred, who have poor eyesight.
Fred has poor eyesight as well.
Yeah, I mean, he has glasses, so I don't think he's wearing them as an accessory. Speaking of Fred, unfortunately, I can't hear him in my ear anymore, but I'm sure he's very happy about what I have to say.
I thought he'd be chewing your ear off.
Yeah. No, he's a Frenchman who doesn't take himself too seriously. He's a nice guy. So
I can hear everyone in the studio just burst out laughing.
So, in disbelief, exactly. So we have the Tesla here. So I've selected my direction. Obviously, I can't sell to open on a share dealing account. So I've selected buy. I've selected my number of shares. Let me up it up a little bit. You know, I'm a baller.
One day.
Exactly. I'm trying to be like Rich. So I've select limit level, right? And then I select my price. Let's say I'm willing to go up to this price. You know, small, decent trade to start the morning, start the week, right? So, does everything look good for you? When can I send this order through? Is there anything that's wrong with it?
So again, I can't see the price, but it's a limit order.
Yes.
So it would have to be less than what you see for the current
Okay, so
price.
I need to decrease my price, right?
So a limit order is to always buy at a lower price. Okay.
Better than current.
Better than the current price, yeah. And this would only execute from 12 on non-leverage, which you're on now, so midday. Yeah. Okay.
All right, so from 12, so now that I've selected the correct order level, I've selected the direction, the quantity, and the expiry, which most importantly is day all sessions and not just day. So you have day all sessions, and then from 12 you'll be able to place this order, and then you'll be filled at your price or a better price than that, right?
Correct. And if you did day, then it would only work from 1:30, which is when the main session opens.
Yeah. So
also, if you did day all sessions, it would also work in the post market as well, which is from on non-lev 9 till 10 on a Friday, 9 till 10:30 Monday to Thursday. Yeah, because on the Friday, we shut half an hour earlier.
You're right. So we're only able to do this on all session stocks, right? I can't place a limit order from 12 with a regular US stocks, can I?
So you'd only be able to do it on the web trading platform, but if it's a stock which isn't all sessions and it's on non-leverage, and you can actually call in and we can do it on the phone from 12.
Okay, very good. And that is very interesting indeed. And while we're on the topic of shares, if I just go back to the spread bet accounts.
Yeah.
So we touched a little bit on the futures and the forwards. So let's say I have a June contract.
Gone for Vodafone there.
Yeah, Vodafone.
Rich's favourite stock.
No particular reason that I chose Vodafone. I'm definitely not tired of hearing about Vodafone and the broken record of it. You know, every day I wake up and I think, how many shares have Goldman Sachs bought today? I can't wait to find out.
Do you know what, Ronnie? I think I know. Like, Rich must be getting like discount on his phone contracts.
I think
something's going on.
Yeah, I think Rich is an affiliate marketer. He's an affiliate marketer. So while we're in the process of exposing Rich as an affiliate marketer for Vodafone, let's try to teach our trader friends some knowledge as well. So let's say we have the forward.
Yep.
I'm trading on the June 25 expiry, and it expires. Let's say it expires on the 15th of June.
Okay.
I call you in on the. I call in on the 12th of June, and then I say. Luke, the super handsome guy from Trading Live with IG, can you help me? I want to roll my forward position from the current June 25 contract to the September 25 contract. before it expires.
Yep.
If I do so, how do I do so, and is there a benefit to me doing so?
So you can call in to do that. I mean, if you were going to trade a contract 3 days before, and you want to hold it for a long period of time, you'd be better off trading off on that further out contract, which would be available on the platform. But what we would do is we can do the rollover for you. Now, with rollovers, just on shares, you get concessions on shares, but not on the other markets. So the concession on shares is you get half concession on the market spread. Okay, so what we do, we just adjust it from our side. We get the bid and offer from our side, add them together, divided by 2. That's of course the price in the market, and then adjust the spread that way. And then we can process that on the account and get you into next contract if that's what you wish to do so. Or what you can do is you can wait till expiry, have rollovers enabled, and then that way you can also get into the new contract. So whichever one you prefer.
So effectively, if I'm calling you and I say I want to roll my position beforehand, what you're able to do for me is you're able to use the market spread or take the mid spread, is it?
Correct.
Rather than the full spread. So I'm actually getting a discount on my spread as well by rolling it earlier on.
So it's a discount on the spread in the market.
Yeah.
Spread in the market. So we get the cash prices, get the bid and ask, add the market divided by 2, and then adjust for spread that way.
Okay, brilliant. And we have a question. Does all session orders execute in regular sessions if limit order is hit then?
Yes, it does. So as an example, let's say, obviously not today, let's say you want to trade Amazon, and you set a limit order, and the price gets there at 4:30, and you've done the limit day all sessions like we did earlier, then yes, it would be hit, and you would be filled, assuming it's good in that size, and it reaches that relevant price level.
Brilliant, brilliant. So let's leave the unfast paced of share dealing orders, and let's move into what is the bread and butter of Tasty and also IG, which people forget that you can also trade options on IG, especially on our spread bet and our CFD platforms.
Yeah.
So we do have quite a wide variety of spreads or options that you can trade on our spread bet account.
Yep.
So you can trade them with we can trade the FTSE, for example. So can you tell me, how does it work when I'm trading an option on the spread bet account, differentiated to just trading the CFD or the spread bet of, say, the February option of FTSE?
So with the spread bet and CFD, the spread bet would be in, let's say, pound a point, whereas CFD is in number of contracts. Okay.
Yeah.
One thing to note is, if you just bring up the platform for me, if that's okay, and go to our equity offering for options.
Right.
One thing I really wanted to highlight was how we do have a lot of shares available which aren't on the platform.
Unfortunately, you can't trade these now, because you can only trade options or shares options when the underlying market is open, right?
Correct. So you can only trade equity options in the main session, so from 2:30 to 9, those US equity options, of course. However, if there are any on there and they do have a market cap of $2 billion or greater, then please do call in and we'll be able to quote you on the phone and book them on your account that way. Perfect.
And if we jump into something that our trader friends can actually do today, trading an option that is actually online. So how does it work when I want to trade, for example, if my website can roll? So let's say we want to trade the FTSE.
Yep.
And I want to trade the expiry there. My website, my IG platform is not collaborating. But yeah, if you can explain to me and trader friends at home, when I want to trade an option, a FTSE option, how does it work with the sort of bet size, and how do I go about it? And is there anything I need to keep in mind that is other than, just regularly trading the FTSE?
Sure. So like Ronnie said, we've got options on our platform. So an option is the right but not the obligation to buy, sell a market at a specified price at a specified point in time. Okay. Now, with options on our platform, what you see is you see the options chain, okay, and you see calls on the left-hand side and puts on the right-hand side.
Here we go.
Does it work?
Yeah.
Let's have a look. That's easier.
Get him. Thank you, IT.
So yeah, there you've got all the prices. Essentially, you are trading on volatility, right? What you can do. Sorry, we're on a spread bet or CFD account here, right?
We are currently on a spread bet.
So what you can do is you can bet here in pound a point, okay?
So let's take buying a put.
Buying a put.
Yeah.
Okay,
All right.
buying a put. Well, buying a put would be bearish. Buying a put is you buy the right but not the obligation to sell a market to someone else at a specified point in time, okay?
Yeah.
Now, buying a put, I would say, is quite a good strategy if you're bearish rather than just going short on the FTSE, let's say. The reason being because when buying an option, what you've put down is the maximum amount which you can actually lose on that market.
Right.
So, as an example, in 2024, a lot of people on the US indices, including myself, thought that they can't keep going up and up and up and up, and they did. Okay, so rather than just going short Nasdaq, as an example, then what could potentially be a better option is to buy a put, and then that way you know that the max you can lose is what you put down. Okay, rather than if you just keep a naked short open, then you've got a lot more risk involved.
Absolutely, and it's an easy way, right, to keep all your trades in one place. So you can hedge your spread bet exposure that you have on the FTSE that you're just taking a long or short, or the forwards that we were talking about.
Yeah.
So if you're taking a longer position on the spread bet and you want to have a covered call or a yield enhancing put or anything of the similar, you can do so right here. And how does it work in terms of sizes? So let's say I buy £10 a point on just the FTSE.
Yeah.
Just a regular spot cash.
Yeah.
And how does it work if should I just take £10 a point on the option as well? Is my exposure the same?
So that £10 a point there, what you do, if you're buying a put, price is 56 times 10, 560 quid, that's a max you'd lose.
Right.
That's what you put down, okay? So, as I said, when buying an option, which is what you were doing there, the max you can lose is what you put down. However, when selling an option, the loss is basically unlimited, okay?
Right.
So that is one thing to bear in mind. Selling options is more risky than buying options, because with buying options, you know beforehand what you can lose.
Brilliant stuff.
So when you sell a call, ideally you want the price to go down, stay the same. Well, when I mean stay the same, I mean move less, but move by less in the premium. So you want it to go down, so if it goes up, then you lose money. And then with selling a put, the opposite. You want it to move by less than the premium or go up, but if it goes to zero, then you lose money.
Ravishing stuff. I might have to go ahead and try that on my demo account.
What have you got on your demo account at the moment out of interest?
Currently, I am longing DAX.
Long DAX.
Trend is your friend, my friends. So we have about 2 minutes or 1 minute and 30 seconds left before Fred is kicking us out. He's doing sort of a reverse imperialism on us. The French are kicking us out now. So do you have any last words that you want to share? Any words of wisdom that you want to share with our trader friends? Anything? So a summary. If they need to take away one thing from you today and all the information you've given them, what is it that they should take with them?
Have a strategy. If you want to hold a position for a longer period of time, then think about and you're going, let's say FTSE 100 or one of the other indices, and you're going long, okay? And you want to hold it for a prolonged period of time, so greater than a week, then you would be better off trading that futures contract. So before you place a trade, have some sort of idea if it's a long-term trade, if it's a short-term trade, and then go from there really, because it's really important to us.
Yeah, brilliant.
And in trading services.
Sorry, mate, I have to cut you off there. It's been great. Me and Luke have been really happy to host you guys and be here with you tonight. Or not tonight, today, this morning. So we're going off for a 3-minute break, so you're finally gonna be relieved from us. After that, the best looking 65-year-old coming out of Scotland, Rich MacDonald, is coming back, and he's joined by Aisha Anderson, and they have some exciting stuff to talk about with you guys.
This is 65, yeah?
Thank you.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Welcome back, welcome back. Well, do we have a treat for you after that shambles that just happened? But no, didn't they do well? Aisha Anderson, welcome. Head of Customer Engagement.
That's right, yes.
Which is a great little add-on we've got here, isn't it? If a guy wants to propose to his girlfriend and is a client, can come to you.
Not quite, Rich, not quite.
Have I got that wrong?
You've got that just a little bit wrong.
Here was me thinking the diamonds and, you know,
Do you know what? Do you know what? That could be a good side hustle, actually. I'll look into that. I'll look into that. But you know what I do here at IG is I look after, just for, in really simple terms, client communications. So all the client communications that go out, whether they're promotional, whether it's kind of the information related to accounts, basically any comms you get from IG, email, push, etc., will be my team that will be running that.
And just in case the people at home, some are clients, some aren't clients, some will have seen stuff come into their inbox, some won't have. How does that look? What goes out in the morning, for example?
So we've got a range of stuff actually that goes out. One of the key things that actually I wanted to highlight today was things around information and insights that will help clients kind of start the day. Thinking about where do I start my trading positions, what's happening in the market. And one of those things that we send out every morning, about 7:30, just in time for the markets to open at 8:30, is the morning call, which our analysts pull together, and it's an overview of, the last sessions, what the top risers and fallers were, what the opening calls will be today, and any kind of, upcoming events that might impact the market. So clients are ready to, figure out, well, what am I going to do today? What information do I need to consider, etc. So that goes out every morning. And we also have, in a slightly different format, a video called Trade of the Week, where another of our analysts pulls together his sort of trading idea, and he kind of places a trade, and every week he goes back and looks at how well it's done.
Yeah.
Sometimes it does well, sometimes it doesn't. But I think it kind of helps with just insights around thinking differently, or perhaps, giving people some ideas to test and try out.
That's exactly it. And then, so that's Chris Beecham that does the morning call, or is it amalgamation of others as well?
Yeah, it's mostly Chris Beecham that'll do it. If he's not around, of course, Axel does it. And then Axel does the trade of the week.
Yeah.
So we've got them both very busy every day.
And this was, something that we really pushed for, was to get Axel to do it live on air. So that's 10:05 every Monday. But then if you do miss it, or you want more details, then what time roughly does that come out on a Monday?
So that typically goes out about 7. Well, the morning call goes out at 7:30. The trade of the week typically goes out on a Sunday afternoon, actually. Yeah, so we send that out. So I think he does it again live with you guys. So,
excellent.
Yeah.
And then, so that's the email side of things.
Correct.
But I guess, and this is an important time as well. Anybody who has questions out there on any of the emails, any of the comms, or stuff that you've been dying, maybe you see it other brokers, maybe you see it because apparently there are some competition out there. I mean,
Unbelievable. Don't believe it. Don't believe it. But no, absolutely. Like, if there's anything that we do that you like, please let me know. If there's stuff that we don't do that you'd like us to do, I'd love to hear about it too.
And so if it's not on email, then how do you get messages out to people at the moment?
Yeah, so, I mean, historically, we've been very reliant on email, and we like to talk. Our emails have been super, super long, and I'm not sure a lot of you actually have enough time to read those emails.
Guilty. I must admit, as a client.
Do you just delete, or do you put it in a different box to read later?
They all go into my research box.
Right.
And so I will, but sometimes you just miss it, unfortunately. And sometimes, if I'm traveling or I've got a journey, then it's great.
Yeah.
It's right there.
Right. Yeah. So, well, we're very aware of kind of the time pressures and how busy you all are. And so what we're looking to do is introduce multi-channel comms, right? So we're moving away from email. There's still a place for email, because sometimes you need the context behind a story, for example, right? You need that space. But we're looking to we're doing more push notifications now, and more in-app messages. So if you use the mobile app, you'll hopefully be seeing a lot more messages coming through from us and push notifications. So on that point, shameless plug, if you've disabled notifications, please stick them back on, because we do a lot of the push notifications will be things that are relevant to kind of market changes, right? Yeah. So when there's kind of unexpected volatility in the market, we want to be letting our clients know what it is. We typically save it for big key events rather than any movement in the market. So we just want to make sure that we're not missing a trick, and our clients are on point.
And especially if something comes through like the non-farm payrolls or important economic information.
Yes.
That's really useful.
Yeah, that is. And, we're really on that, in fact, during earnings season, we are incredibly busy because we're just kind of constantly getting things out. So again, is that useful? Is it not? Do you want to see a different format? Love to hear from you guys.
Yeah, I guess, and it's that border of feeling like you're intruding on people's time, and popping up onto their phone.
Yeah.
Or could that actually make people or save people a lot of money? It's
a fine balance, isn't it? It's a fine balance, and this is why we don't do every single movement, right? I know that there are brokers out there that will literally ping you when something moves 1%, or and actually, that's not what we want to do. We don't want to bombard you. We want to make sure that it's the big things that really will matter and that will shift the dial.
Yeah.
Because we don't want to miss opportunities to trade. But also, we want people to kind of be thinking about their positions all the time. If there's any adverse movement in the market, right? So that's why we keep it to the big earnings season stuff. Like the other week when we had the DeepSeek news.
Yeah.
Yeah, that was.
How was that morning for you?
fun. It was fun in so many ways. But yeah, but that's what we're in. You know, we're in this game for. That's the stuff that keeps us going, actually.
Yeah.
So super excited to be able to get something out, but then follow it up. You know, you can do a push notification, but there's only so much you can say in a push notification, right? You could probably have
a limited number of words.
That's right. We can only get probably about 10 words in there, really, before it starts to cut off. So really, the notification is for there's something happening, check out your positions, and we'll typically follow that up with an email with a bit more context, usually written by Chris or by Axel to give context to the movement in the market.
Great, excellent. Well, as long as we don't let Ronnie or Luke write any, Luke Cooper.
I mean, I don't know. I'd be quite up for, just giving people an opportunity to see what they're capable of.
Yeah.
You never know.
Now, what happens if people aren't getting those emails? Is there somewhere on the platform that they could go to?
That's right, yes. So there are 3 sort of emails that we send out, the morning call, the trade of the week, and the week ahead. And you should be getting those in your inbox. They're a subscription. If you're not, there's 2 ways to do it.
Well, they have to pay for them.
No. Oh, free subs. I mean, like, no paying. Everything we do is for free.
But we could try to charge a bit.
Don't you start that. Don't you start
Trade
that.
Live with IG. We are actually moving to a new YouTube soon, and there is going to be a subscription model.
I bet you people will pay just to see you.
Yeah,
I bet they do.
I think you'd find numbers went down pretty swiftly. That was a joke, everybody. Don't worry, Monkey Man.
So there's 2 ways you can do it. You can go on on my IG
Okay.
and have a look in settings.
Okay, I'm
and
on
under
that, yeah.
marketing communications, and there should be a section there called trading periodicals. That's just coming up there, and you can see the morning call, the week ahead, trade of the week. If you make sure that those 3 boxes are ticked, you'll be getting our emails every morning for the morning call and every week for the week ahead.
And which trade? Okay, trading. Okay, so I'm subscribed.
That's right. So
Yep.
you'll get everything coming from us now.
And what trading the trend? Oh, I'm not.
That one isn't currently running at the moment,
okay,
so
so
we do
that's
actually
fine.
need to take that off. But the first 4 definitely, make sure you've got those enabled, and you will get comms from us. The other way you could do it if you're not a client is to go on our website on ig.com under news and analysis and subscriptions and downloads, and you'll see a list of the 3 I've just talked about there that you can subscribe to even if you're not a client.
Even if you're not a client, that's impressive.
Yeah, we give you good stuff, peeps.
Yeah, and for free, and you don't even have to be a client.
Look at that.
Very generous, Aisha.
I know. Well, we do need to kind of, get people involved in trading. We want to make sure that it's, accessible. And we've got, like I said, we've got some really good content. And if one of those people who were an IG client ends up being an IG client in the end, hey, it's bonus for everyone.
Now, we got 2 questions so far. Monkey Man, subscription is without Vodafone. So that's, yep. He doesn't want to hear anything, especially push notifications on Vodafone. But more importantly, has there been any progress on providing market analysis? That was, of course, the work that Monty does for non-professional traders. Does that make sense?
Yes. So actually, we had a discussion about this a few weeks ago, actually, because I know that Monty's analysis is really, really popular. So we're looking at that at the moment, a way for us to pull everything together, stick it in a format that makes sense, and get it out to the right people. So absolutely working on that at the moment.
Good stuff. And then, right, so that's all the things that are done now. Have I got everything set up correctly on the top bit? Product knowledge and events. I seem to have unclicked that.
Well, you should probably click that back on, because we will typically, when we talk to clients about kind of new developments or any product features that are coming, we always check that and see, have you ticked that box? And if you have ticked that box, we'll tell you about it. So if you haven't subscribed to product knowledge and events, then we typically won't invite you to webinars, for example, or we won't tell you about any new products we've got. So if that's unticked, that needs to be ticked, please.
Brilliant. There we go.
Yes.
Right, done that.
Good.
Now, what about the future? What do we have in development? What are you looking to sort of gauge interest in?
Yeah. So we are looking at bringing in a bit more contextual relevance to our CRM, right? And rather than just sort of providing generic information insights to clients, we want to do things that are a little bit more relevant to them. So, for example, we're looking at taking information in watch lists and serving up news and content based on what's on your watch list, so that if we're sending you a push notification or 100, it's about stuff that matters to you, not necessarily just everything going on in the market.
Because I have noticed before, if I trade a stock, even a month ago, and there's it's moved a lot, then I get that push notification, and somebody else probably wouldn't if they've never traded it.
That's right. So we'll have to find that balance, because actually there will be a reason for sending a push notification to people who haven't traded something before, because it could suddenly be of interest, right? So we're looking at ways to think, well, if you've traded stocks like this, would you be interested in stocks like these, for example, and kind of, finding opportunities to do things like the pair trades that you talked about, I think last week it was, right?
That's right,
So if you're trading Nike, well, what about Adidas or Reebok, for example, right? So we're looking at ways to kind of provide insights that are complementary to the stuff that people are trading as well.
And then is that taking advantage of AI, or where does AI come into the mix?
AI,
buzzwords.
AI is everybody's talking about it at the moment, and our approach to AI is to always put a person in between the AI and the client, right? Because we need to make sure that it's not hallucinating and telling our clients things it shouldn't be telling.
Oh God,
so at the moment, what we're using, I'm actually working with our AI team on a tool that will help to summarize news stories based on clients' preferred trading patterns, right? So, for example, if we know that you like trading Forex, for example, we'll summarize news around Forex and not necessarily on commodities. So that's something that we're looking at doing. For, if the AI is just summarizing news from reliable sources, then we feel a lot more first draft content. So if I need to write an email to clients and I've got, to get it out in 20 minutes, I'll typically use AI to just say, look, I need to say this to clients, here's the background, give me a first draft, pop something up, and then typically me or someone on my team will edit it and make sure that it's on point.
Right.
So just
I think Bloomberg just fire it out now. It feels as if they don't even check what they're...
I mean, I have no idea how advanced their model is. I wouldn't feel comfortable just letting AI fire out unless we could sort of, keep eyes on it. But we always make sure that a human gets eyes on the content, we edit it, because, ultimately it's got to feel human, right? So that's our approach. So we're doing quite a lot with AI at the moment. A lot of our CRM tools, the platform, the MarTech, actually has built-in AI. So even things like, what's the best time to send an email to Rich? We know he always opens it at 6:46 a.m. Yeah, so we can schedule so that you're receiving comms from us at the time that works for you.
Wow. God, and I wouldn't have even known that. That's very clever.
Maybe I shouldn't have said, then you'd have thought we were really...
If you're sending me, for example, could it be on the Explore page?
Exactly. So Explore, you'll probably see actually there's something on there around the news that you're surfaced. I believe that will be based on your watch list and what you're trading. So we're trying to personalize everything that we do in the app, in our comms, so that you have that kind of consistent experience. So when you're looking at stuff, it's relevant and you'll keep coming back. If you open your news on Explore and it's really irrelevant to you, you're unlikely to go back, right?
Yeah.
So we're always looking at ways to personalize that experience. But actually, I know people talk about personalization a lot. I prefer to call it contextualization, because it's about the context that works for Rich and the context that works for X and Y, rather than kind of personalizing feels like a very broad term. But if you think about context, I think that will help you understand what we're trying to do.
And I must say, thank you very much for getting the Trade Live with IG banner. That's something that we fought for a while. I know it's hard to see there, but at the top of your Explore page, which is of course the fourth option, then right at the top there, you've got Trade Live with IG, and that's how you can watch us in app if you're on the move, if you don't have the YouTube at the ready there. So that was all thanks to you, Aisha. Thank you very much.
I mean, there was a lot more people involved in that. And
you're getting a round of applause.
Oh, thank you very much. But no, absolutely not just me. There's a whole team behind this. So brilliant product teams that we've got working behind the scenes.
Yeah. Now, how many people do you have working in your team? Do you want to give any of them a shout out?
Yeah, well, do you know what? I mean, I've got quite a big team. I've got some people in London, some people in Johannesburg, some people in Bangalore. So too many to give a shout out to. But here's to CRM and our CRM tech team. You guys do a good job keeping this stuff going every day. So good job.
It really is. And there's nothing better than knowing that almost you've got our back, right? As a client, something comes through and I wouldn't have seen it. I'd be in Tesco's, you know, I'd be busy getting about my day. But then, boom, you drop something in and, you know, it's a big decision that I wouldn't have otherwise seen.
That's good to know. That's good to know. And honestly, Rich, everybody out there, if there are things that we're not doing that you'd like us to consider, please get in touch. Let us know. More than happy to explore. We're in a stage here where we're doing a lot of experimenting. So I'm happy to try something new.
That's it. And it's missing out the noise, isn't it? And you know, your job is so hard filtering that information.
And there is a lot of noise out there. And, you know, we can't necessarily always filter the right stuff out. Sometimes we filter the wrong stuff out, right? And that's why I'm really, really keen to get to understand kind of clients and how they trade and what they're interested in, so that we can then serve the content that is relevant. Don't always get it right, but yes.
Now, there is a new type of investor in the market, isn't there? And that's something that has been very apparent since COVID, I guess. And that's this investing in ETFs, but for the long term. What's IG done to...
Well, do you know what? IG are looking at, you know, providing a solution for people like me. You know, we were talking earlier, and I said I'm not a trader. I just, you know, I like my money too much to trade, you know, leverage. But what I'm interested in is saving for the future outside of the really poor interest rates on normal savings accounts. So we've launched an app-first investing app called IG Invest. And this is really aimed at the developing investor. So this is somebody who, you know, doesn't just want to put cash aside in a current account, but who wants to delve a little bit deeper into stocks and shares and ETFs, make a little bit of a better return than you would on your savings account, you know, learn a little bit about stock markets, you know, and there's been a lot of news recently about the government perhaps thinking about, you know, changing the tax kind of status of cash ISAs. So people need to start looking a little bit at investing in stocks and shares. So IG Invest is our answer to that, to the developing investor. It's probably not as advanced as the existing share dealing app, and certainly, you know, that's not our demographic. So to our clients out there, if there's anybody in your life that isn't quite as experienced as you are, but wants to try, you know, investing in stocks and shares and ETFs.
For the first time.
For the first time, IG Invest is there. We've got, you know, some very simple, I guess, educational modules in there. Just, you know, what are stocks? What are ETFs? You know, what's the power of compounding? How can that help kind of me grow my wealth? You know, and it's got news and it's got some basic fundamentals in there as well. And my colleague, actually, Marcus, will be in here on Friday telling you a little bit more about some of the features that we'll be releasing in the coming weeks.
Good stuff. Aisha, thank you so much for joining us on Trader Tools, our head of customer engagement. And you're getting a round of applause from the gallery.
It's a pleasure. Thank you for having me.
We'll see you soon. Thank you.
Thank you.
We'll see you after the break with Imran coming in, the man who taught me options 20 years ago.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Right, welcome back. We've got a special guest in the house. It is Imran Laka. How are you, Imran?
I'm good. Thanks for having me on, mate. It's great to catch up. I haven't seen you in, what, 15, 20 years?
Well, what year did you leave Credit Suisse?
I think it's 06.
Okay,
06, yeah.
so
06,
literally 19 years then.
That's insane.
So give us a bit of background. Who are you?
Who am I?
And what positions have you held in the banks?
Okay, so I've been an options trader for best part of 25 years. So I started at Credit Suisse. That's how we know each other. Went on to
the graduate scheme?
Yeah, I started straight out of the grad scheme.
Yeah.
Did a little month in New York and then came into London and learned my trade there. And then went to Merrill Lynch. Traded through the crisis over at Merrill Lynch.
Is that where you were? Woof, during the Bank of America takeout?
Yeah, exactly. So we didn't know whether the bank was going to exist the next day, right? And then all of a sudden, we got taken out by Bank of America.
Wow.
And there's that whole big transition. I actually ended up running the desk for a bit over there because my boss got a job in the US and I took over the European desk. So I became head of European index options without really expecting that, but it just kind of happened.
At 30.
Yeah,
29?
I think it was just under 30 or something.
Yeah.
So,
and Merrill's were a big player in options.
Yeah, they weren't afraid to swing the bat. Yeah, we definitely had some big clients doing big size over there. And then took a break, got a bit burnt out after 10 years, took a break, ended up at Citibank doing the same sort of thing, index options again. Had a little stint over at Bluecrest Capital in 2017,
so that's
18.
a hedge fund for everybody watching. So
So did a bit of macro portfolio management over there. And then now I do options insight.
Well, that's it. And this is the great thing. So I have watched your YouTubes because we're pretty much followed a very similar path. You were 20 years in the city and then you thought there's something more than this. There's something that I feel just that sort of good energy when you're giving back and you're teaching people rather than going into a bank every day.
Yeah, I mean, it was a funny one because I had loads of colleagues in banks who kind of grew up similar way to me, did economics and stuff at uni and then got into that banking thing and then it just became their life, right? And they ended up going up the corporate ladder, becoming gazillionaires and doing very well. But I always had this problem where I really hated the kind of political side of banking and like just spending all your time doing meetings. Basically, I was in love with the trading game.
Yeah.
I really liked like trying to figure out the market and put on positions, and I like leading a team of younger traders and sort of teaching them and educating them. But the bit that gets you to senior management, I really couldn't stand. So that wasn't for me. So then I realized that after the thing at Bluecrest didn't really work out, I was like, I don't want to go back to banking. I've always loved teaching people. I've always loved teaching the grads and the interns and stuff, and I know my trade very well. So why don't I combine my passion for trading and my passion for teaching and see what I can do? And that's what Options Insight was all about.
Brilliant. Now, you've got your own YouTube channel. As I said, the one I have seen is The Healed Trader.
Yeah, so that's like a series on my YouTube channel, right? So I do various bits and bobs on there, but I've had quite a lot of changes going on in my life in the last sort of few years, and so I did a bit of therapy. I kind of reflected on things quite a lot, and I'm the sort of person, instead of writing in a journal, I prefer to kind of just chat, right? So I had a friend who I was also doing a different podcast with, and he was on his own journey of sort of spirituality and stuff. So we just started chatting about life and our reflections and what we learned, because we're both in our 40s, you know, we're married, I'm divorced, you know, we've got kids. The things that go on, the things that how your priorities change in life and the learnings through that experience is quite an interesting conversation. And for people who are kind of in our industry, who have this habit of focusing on work and making money and success and kind of letting those other things fall by the wayside that are actually more meaningful, you know, it kind of helps maybe reorientate them and kind of give them some advice from people who've been there, done that, seen the good side, but also seen the bad side.
That's right, and it's great, and it happens so many times that it doesn't matter how successful you are, how much money you make. You know, we've all seen hedge fund managers, you know, that are making hundreds of millions end up in similar situations. You know, divorced, and the main message I took from the call is that money can buy you freedom, but it doesn't necessarily, if you don't know how to use that freedom, then it doesn't give the personal worth. And
unless you get your priorities right and figure out what truly makes you happy and fulfills you, then there's a limit to how far that money's going to get you, basically, right?
Now, one thing that does bring us both happiness is the market.
Indeed.
Right? And trading, and just, it's funny, you can step out, or you're in the banking world, and that's sometimes lost because not everybody in the banking world is there for the markets.
Yeah, that's right. Very much so. Like you could probably count on one or two hands on an entire trading floor the people who really are proper traders, right? Proper risk takers, have like live and breathe the market, basically, right?
That's it. And that's why I was so keen to get you on the show, because, you know, it's what I really love about this show is that it's by traders and it's for traders. Everybody's sitting at home. And the reason that you're here is actually because you were watching us on the app as a client of IG and Tasty on Thursday.
Yeah, and I was like, what's Rich doing there?
And what I would love to go through today is, you know, some of your teaching. And we go to this thing, we have market measures. So we're doing a beginner's guide to options, and we just started it on Thursday. So I was thinking we could go through a couple of the takeaways that we learned on Thursday, Friday, but one slide in particular that runs through the 4 basic buying and selling calls, buying and selling puts. When to do it, when to, you know, what kind of vol, you know, all that kind of thing. So should we dive into that?
Let's do it. Let's do it.
Good stuff. Right. So a quick summary from Thursday's understanding call options was buying a call option allows you to buy 100 shares of stock at the strike price you choose in the US. Selling a call option enables you to bet against the movement of a stock, but exposes you to undefined risk to the upside and the obligation to short 100 shares if the stock price is above your strike at expiration. At expiration, long call holders are profitable if the stock price has moved up past the strike price and the premium paid for the option. And conversely, short call holders are profitable if the stock price is below their strike price or above the strike price by less than the credit received for selling the option. So that's our call side. What about the put side? Shall we let you run through the takeaways from that one?
Sure. So the put is kind of like the mirror image of the call, right? So where a call is your right to buy, the put is your right to sell. So generally, if you're bearish and you think the stock's going to go down, or you're worried, you own the stock and you want to protect it, that's what's going to make you want to get involved with puts, right? So similar sort of story. Do you want me to read it out, or just sort of?
Oh, you can summarize it.
Yeah. So you know, you say same thing. 100 shares when you trade, the multiplier is 100, so you get to sell 100 shares at the strike price. It's going to be profitable at expiry if the stock is trading below that strike price, but by more than the premium paid. Like say every single option that you trade or that you buy, you have to spend a premium for. So you've got to take that into account in terms of the true P&L of the trade.
Yeah.
Obviously, you could sell puts. That's going to mean that you collect the premium, and as long as the stock doesn't fall below the strike plus the amount that you've received, then you'll make money on those. Now, selling puts tends to be pretty dangerous. Just generally, because equity markets can be quite violent on the downside, and that's why we have what we call a skew in the equity vol space. You have this downside skew, this kind of extra premium on the downside.
What's an easier way to put it to describe this idea of skew?
So it's all about the supply and demand imbalance in the market, right? So everyone own shares, right? We've got this universe of investors that own a ton of shares, okay? And so one of the main reasons why options exist is people want to hedge that exposure. So there's like a natural demand to buy put options because that allows us to protect our stock holdings.
So like drivers with their car insurance, I guess.
Exactly, it's like an insurance product, right? And so that natural demand is going to create a premium because the sellers of that protection, who are like the market makers, they're going to be like, okay, well, there's endless appetite to buy this stuff, so we're going to offer it, and if people buy it, we're going to offer it a bit higher and a bit higher and a bit higher. So as that demand for protection comes in, it drives the price of downside puts higher. And then on the flip side of that, people who own the stock, they want to earn a yield off the stock.
Yeah.
So a way to earn a yield off the stock is to sell call options and say, I don't mind getting taken out of my stock position 5% higher in a month or 10% higher in 2 months or whatever it is. So that'll determine the call option I'm willing to sell, and that creates a supply of call options. So because we've got a demand of put options and we've got a supply of call options from pretty much the entire universe who owns stock, like the big real money guys who own billions and billions of shares, that supply and demand pushes it so that upside calls are quite well offered, so the prices go down, and they trade at lower implied vols, which is kind of how you price options, and then puts trade at higher implied vols because of that demand.
Great. So let's take that into this slide, and I skipped past this on Friday because I had a feeling we were going to be able to come back to it today. This is your cheat sheet, isn't it, of the basic 4 strategies, and it covers buying calls, buying puts, selling puts, and apart from the descriptions that are there, is there a way that you take people through the way to think about it?
Of course. I mean, like I say, these are the most basic because what you're looking at there is single leg trades. Just one call, one short call, or one long call, one long put, one short put. The reality is pro options traders don't generally do that, right? Like for me to trade a long call or a long put by itself is a super high conviction trade, right? So I have to be not only right about the direction of the market, but I also have to be right about the timing, right? And I also have to be confident that the implied vol isn't going to collapse against me, right? So that's quite a lot of things I have to get right, basically.
Because that could mean something like you buy a call on Nvidia and the stock goes up and you still lose money.
And that happens to novice options traders all the time because they either pick too short an expiry, right? And the move happens, but it happens 3 weeks after they thought it was going to happen and their option died worthless, basically, right? Or they get the move, but they don't realize that they bought an implied vol of 100 because it was implying a massive earnings move. And then the actual move was less than was implied by the earnings and they made no money. Basically.
What can be worse than buying a call option and a stock going up 10% and you still don't make anything?
That's right. So this is why, in our community, Options Insight, we've got like traders from all over the world, right? And they come to me for that guidance because they want to know, okay, look, I did this, I tried this and I lost money. How can I do it better, basically, right? And that's where you sort of teach people how to analyze implied vol history to get an idea of where is the implied vol in the range. And so, how much upside or downside does the vol actually have, right? That's one thing. Then you could look at like things like term structure where which expiry is trading cheap or expensive. Is there anything there, right? And then also you can do spread trades. That's really where the real alpha is, right? Where you basically do call spreads or call butterflies or things like that, multi-leg option trades that look and feel like a call option would,
Yeah.
but neutralize a lot of the things that are going to go wrong with that call option, like the time decay or the Vega reset and all these things. So that's what we're teaching over at Options Insight.
And so this is a little teaser of everything we've got coming up in this beginner's guide to options. So we've been through calls, we've been through puts, and over the next 2 weeks, we're going to try and take you guys, to that level of understanding what we're talking about in, well, US options, but then it's just such a shame. European options they've never
died a death. They've died a death. Yeah. Even, I mean, I grew up trading European options. I've lived in London pretty much my whole adult life, and I trade only US products.
There you go.
Mad, right?
It's incredible that they've just never managed, UK and Europe, right? Never managed to get that liquidity there.
Yeah.
To bring the spread in.
Yeah. I mean, I don't really know why it played out that way, but yeah, even when I was in the banks, Eurostoxx was the one index with real liquidity. But the FTSE, which I actually grew up trading, I started trading the FTSE in 2004. I ran the FTSE book at Merrill, which was a big book. I mean, there was some liquidity, but it was just deteriorating in a straight line, right? And so the FTSE, the DAX, major big indices, but the options markets just faded away. It was really weird.
It is.
Yeah.
Now, market view at the moment, Imran.
Oh, here we go. Put me on the spot. Look,
Tricky old world.
I've been looking for a correction, to be honest, for like the last month, and we keep getting these little flash in the pan sell-offs because Trump says something or does something on the trade war front, right? And but the resilience that the market has shown at buying those dips back is impressive, right? So my gut was we would get some sort of correction into March. So that would be probably an opportunity to buy the dip, and then we'll probably rally for a good 6 months from there, right? Still waiting for that dip, basically. I mean, I wasn't quick enough. I wasn't quick enough to buy it, really, on those 2 Mondays that we dropped, basically, because it was like, okay, this is the start of something, not just buy it on the Monday morning.
Because normally in that age where we grew up and learned our trade, sell-offs were a 3-day thing.
Yeah, they weren't a 1 hour thing.
No.
Yeah.
And it just, what worries me is, have the algorithms trained on, all the past history? And it's always paid to buy the dip.
Yeah, it has always paid to buy the dip, that's true.
So therefore...
But one day it won't, though.
Well, and what happens then? So let's just put that into context, right? What would you do in options world the day that you see a DeepSeek or a tariffs, but something's actually changed, and we start to see a bad jobs number, or some world event that actually means that it's going to be a 6-month sell-off. What would you do in options world?
That's a good question. It kind of depends on how the market has reacted, though, right? So when you get these drops, how much has the vol reacted? How much has the skew reacted? You got to kind of measure these things and look at where they've moved, right? One trade I really like is what I've got on in my community, which is like a VIX expression, right? So it's a VIX trade. And the nice thing about the VIX is that it can be quite explosive, right? So you can have these situations where the market will kind of drift higher, and the VIX will kind of find a floor, right? So the VIX will just refuse to go below like 14 or something like that, 14, 15, right?
And if it does, it's a very brief moment.
Yeah, and then suddenly the market will turn around and the VIX will go to 25, right? But the nice thing about using the VIX instead of using S&P puts, for example, if you're looking for protection or you're bearish, is that if I buy an S&P put today, let's say, where's the market? 6,100-ish, right?
6,100.
So let's say I buy a 6,000 put today, okay? Expiring in a month, right?
We can have a look at that on the platform here. So US 500, 21st of March on the monthly.
Yeah, exactly.
6,100 put would cost 75 ticks. Yeah.
75 ticks, right? So let's say I buy that because I'm worried market might sell off over the next month. Trump's going to keep ramping up the trade war, things like that. We're going to have a better idea of what the new situation is going to look like. And let's say we might even get be worried on yields, inflation data is coming in a bit hotter, things like that. So you might have all these concerns for the next month. So you'll buy that put. Well, let's say you buy the 6,000 one, right? So not the.
Okay.
So you go a bit lower down. So like you spend 50 ticks on that thing, roughly. Okay. But let's say the market then gradually over the next week or two works its way up to 6,200. Okay.
Which is completely believable.
And what's going to happen to your option? It's going to evaporate. It's going to lose more than half of its value. Right. Might even lose 70% of its value. Okay. If it happens over the next 2 weeks. But if you bought whether it's a call spread on the VIX or whatever, you bought a option structure on the VIX, and we went up to 6,200, and the VIX just didn't do anything. Right, the VIX futures kind of stayed where they were, and they didn't move that much.
Yeah.
Which you do often see. You often see the VIX float, and it doesn't have the downside you'd expect it to have on the way up, because we're going to new territory.
Yeah.
Because we're making new highs on the S&P above here. If we break here, we're making new highs. When we make new highs, the VIX doesn't generally collapse. It holds a bit of a bid, basically.
Because there's enough people that want to buy that downside exposure, right?
And also just because of the realized vol, which is how much the market actually moves, that might actually be relatively high. So the realized vol might be 10 to 12 or whatever it is. If the realized vol was 5 and we literally never moved, and it was like tiny moves, we were stuck in a 10, 20 point range every day and we went nowhere, sure, the VIX can go down. So 2017, the VIX got to 10. It got sub 10, in fact. Right?
And then we all know what happened in end of January.
Yeah. Well, you're talking about January 18, right?
Volmageddon.
Yeah, Volmageddon. Yeah, exactly.
Which was a Credit Suisse product.
But we had a whole year of 2017 where the VIX spent most of its time at 10 or below, which is crazy, right?
Just in that eternal.
Yeah, and that's because realized vols are like 5, right? So it was crazy. So we're not in that world. We're in a world where, we're getting these moves to the upside. We're realizing above 10. So the VIX isn't just going to go to 0 on that rally. So what we do is we monitor that. We call it the VIX beta. We monitor the VIX beta to the S&P, and we keep a close eye on that beta to understand that if the VIX is running out of beta, in other words, it doesn't, and it usually happens on the way up. If we're rallying and the VIX can't fall anymore, that gives us a signal that the VIX is a much better form of protection than S&P protection or puts or whatever, right? Because there's a very good chance that if we go up another 200 points on S&P, we're going to lose very little on our VIX hedge, basically, right? So that's something that we look at closely.
It's only the theta you're paying on that?
So there will be some theta. It depends how you do it. If you just buy VIX futures, there is a theta embedded in the VIX futures, which is called the VIX roll down, right? Because the VIX futures are a forward vol contract, and that forward vol kind of erodes away towards where the VIX spot is. So there is a theta embedded in that, but like you can mitigate that in smart ways by doing option structures that actually earn you some money back, right? So I won't go into the detail, but there are ways to kind of carry a long VIX position,
right?
But do it in a way where, let's say the VIX kind of doesn't go down that much over the next month, I'm going to lose very little, but if the VIX spikes by 10 points, I'm going to kill it, basically, right? So those are the kind of things we try to do.
And there is our VIX over the past, that's since October, and you can see what the 16th of December. What was that? Don't remember that. 17th of
there was a bit of a sell-off in December this year. Can't remember what the trigger was for it though.
Well, that's funny, isn't it?
But look how quickly it comes back down.
Exactly, but it's every time, isn't it? And
that's another thing we play actually. Whenever the VIX spikes aggressively, we play what we call the VIX gravity, right?
Right.
It's like throwing up a stone in the air. It always comes back down, right? So, but the problem with just selling VIX when it's spiking is you don't know if it's going to stop there or it's going to go another 20 points, right? And you'll get killed if you just sell VIX futures. So using option structures when that thing's going up, you can put on really nice risk-reward trades where if it keeps going to the moon, you lose very little. Okay. But if it collapses, you'll make some good money, basically, right? So that's the thing. There's little techniques that over 20 years of trading this stuff, you just kind of pick them up, and it's like you know what to wait for and patiently look for, and then when the conditions are there, you step in and do the trades.
What would you say your most interesting period of trading in the professional life was?
Oh, the financial crisis for sure.
Right.
Like that's just going to be ingrained in my memory forever, right? But annoyingly,
especially because you were at the center of the storm when Merrill.
yeah, that's true. But like, it's annoying though when you make most of your money, because that was the best year I ever had by a country mile, right? So when you make most of your money in crisis times,
Yeah.
kind of biases you a little bit as a trader to kind of always be a little bit bearish,
yeah.
which is not a good bias to have because markets just go up,
That's it.
right?
And they have done since.
Yeah, so you've got to kind of temper that bearishness. But as an index vol trader, you tend to, because the index is where there's the most liquidity in options, and the most fun time to trade options is when it's volatile.
Oh,
and
yeah.
it tends to be more volatile when we go down. So it's like the curse. We call it the curse of the index trader, right? That you're always going to make the most money when the market's going down, and that's going to kind of inherently make you a bit too bearish.
And is it just ingrained in our minds that what can happen, or is it the fact that that was a time which you could make a lot of profits in?
Yeah, it's because your biases happen because that was a fun time to trade. Obviously, it wasn't a fun time for the world or for the market, but as a trader in the vol space, there was some serious movement, right? And so if you were the right way round on that, and you were able to trade on the long side, and you kind of understood how bad things were, but you could just make silly money. Like in one day, we were making what you would normally make in a year.
Wow.
Seriously, like in October 2008, in that week I think we had 2 days where we made, I shouldn't say the numbers, right? But we made 2 days where normally if you made that in a year, you would have been high-fiving. Yeah, it was crazy. But obviously there were desks that were dropping loads of money as well at the time, right?
Oh yeah.
Yeah, I mean there were massive holes all over the place, but luckily we got the right side of that one.
And what was it like coming in? Well, what was it like on the Sunday night when it announced that you were the guys getting saved, not Lehman?
Yeah.
What was the atmosphere like the next morning? Was it disbelief or?
It was relief, right? It was relief.
Yeah.
It was relief. But it's a weird one because we were all just like thinking, oh, okay, we feel sorry for the guys at Lehman because they didn't get saved. But ironically, it was so ironic. Ironically, the guys who worked at Lehman's, a lot of them, the guys who got retained like by, say, Barclays or whoever,
Nomura, yeah.
or Nomura, they basically got massive payouts.
No
They
way.
got like 2-3 year guarantees,
Of course.
which were struck at the levels they were earning before the crisis.
Yeah.
Whereas us lot who got taken over by Bank of America, we basically, some of us got bonuses, some of us didn't. But then a lot of our bonuses were in shares, and then Bank of America shares went on to go to zero in the next year, basically. They didn't go to zero, but they went to like something stupid, like less than $2 or something stupid.
I didn't realise that.
Yeah, so it was a really funny situation. Like the bank got saved, but actually a lot of the people financially were worse off.
Yeah.
A lot of the traders.
We've just been looking at the banking share prices this morning. The Barclays, obviously Lloyds is one of the worst. Citi is actually terrible. JP Morgan's the only one that.
Yeah, I mean JP. If you work for JP, I mean or Goldman's, you were laughing because those stocks just only went one way.
Is that the two that neither of us have ever worked for?
Yeah, pretty much.
Well done, mate.
Pretty much. Yeah.
And that's why we're here now, eh?
Yeah, but this is so much more fun, isn't it?
It's true.
Yeah.
Very much so. Well, Imran, it's been an absolute pleasure having you in. They can find you
Thanks
on
for
the
having me.
YouTube channel Options Insight. Is that right?
Yep, Options Insight's my YouTube. Options-insight.com is my website if you want to find out more about what we do.
Excellent, mate. Absolute pleasure. And after the break, we've got Axel Rudolph coming up with his Trade of the Week.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the Close button next to the relevant trade.
I'm Ben Hemmington, and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Hello and welcome to Trade of the Week on Monday, the 17th of February 2025. Let's get straight into that trade from last week where we went long euro dollar. If we look at my daily chart here, I believe, actually this is this week's. Let me look at, whoops, sorry. I seem to have changed my screen here. And I moved my workspaces around, which is typical. Let's just start afresh and have a look at this screen here. I don't know what happened there. Basically, we went long euro dollar. You can see here the euro dollar chart, and did so last Monday down here at 103.20. So that trade's looking quite good at the moment. And if you want to, you can now move your stop loss level to your entry level, to your break-even level, making it a free trade, hypothetically. And otherwise, you can just leave it below the last reaction low. That's the low made on, this is the Sunday chart, so we'll just ignore that one, but on Tuesday the 11th. So that was at 102.92. So yes, I still expect a long-term trend reversal to happen in the euro against the US dollar with an upside target, I think for our trade of the week around 107.50. Simply because we have a resistance up there, but it's quite possible that we can see a major reversal longer term, taking us much higher than that. But for me, we're in the process of reversing our downtrend and heading into a medium-term uptrend, which brings me to this week's trade of the week. And for this week's trade of the week, what I would look at is the US dollar against the Japanese yen. And what we've seen is strong GDP data out of Japan earlier today, fourth quarter growth looking stronger than expected. And on that, the Japanese yen was strengthening. You can see here the US dollar is on track for its fourth consecutive day of falling prices. And it looks to me as if the long-term uptrend here has actually reversed its trend, and that we're now heading into a downtrend with regards to dollar yen, as the Bank of Japan is likely to hike its rates more aggressively than had been expected previously, and sooner perhaps than had been expected. I wouldn't get in here because my stop loss is above the recent highs here made last week at 154.80, and therefore what I would like to do is just wait for a bounce back and perhaps sell into that bounce to, let's say, 152.60. And then have a downside target which could take us much, much lower, perhaps all the way back down towards the 140 area. So this week's trade of the week is to go short at higher levels than current levels on dollar yen at around 152.60. With a stop loss above last week's high. Let me just check where that was. That was at 154.80, and a downside target around 140.80 or so. Hello and welcome to Technically Speaking. Let's start off with questions. We've got questions already. Murky Man, any chance we can look at Axon? Well, let's have a look. And let me just get it up here. Axon Enterprise, I guess that's the one you want to look at. If not, let me know. What can we all see here? Well, we can clearly see that there is an uptrend, and it's been going on for quite a while now. Very nice uptrend. And we're heading back up towards the high seen here in December of last year. And the trend is your friend. It's still looking bullish. On Friday, we had a nice bounce off the support area here, and then had this bullish engulfing pattern where the daily candlestick basically engulfed the previous day's candle, the open being below the previous day's close and the close being above the previous day's open and close, all of which is bullish. We've got some resistance coming up at the February high, and then obviously the highs seen back in December. And if we zoom out, we can look at the monthly chart, for example. You can see that we're trading in all-time highs. So I know a lot of people want to sell something that is trading in all-time highs, thinking it can't go any higher, but it's like a car driving down the motorway. For that car to stop because of its speed, it will take much longer and it will break much further than if it were driving in a 20-mile zone. So therefore, same with stocks here or financial markets. If they have strong momentum behind them, you can see here, this is the weekly chart. We are now on track for our 5th consecutive week of gains. And on the daily chart, you can also see this bullish engulfing pattern. All of that is positive momentum to the upside. And it's more likely, therefore, that the January to February run to the upside to new all-time highs is going to continue rather than a trend reversal to be seen. So for me, this stock, Monkey Man, looks still bullish, and that view from a short-term perspective will remain in play as long as we stay above Friday's low, which was made just down here. Don't forget, though, that basically if we look at the US markets today, it's President's Day, and therefore US markets are shut. So we may get some strange moves today in quite a few financial markets, which are open for trading purposes. And obviously on the IG platform, you can trade a lot of equities and also other markets on a 24-hour basis. So those will be open on the spread betting platform. Right, if you want to send me any more questions in, please feel free to do so. And if I haven't got any, let's just look at financial markets and look at what a lot of people have been doing over the last few days and weeks. And basically, what we can see is that the FTSE, for example, has now topped out last week from its all-time record high at 8,837 on this daily financial bet. And we seem to be currently heading back up again. So without the Americans, we're still in an uptrend. If I go onto our chart, we can see that if we draw in a tentative trend line, because we've only got 2 touching points, we are, actually this is a proper trend line because today that's the 3rd point here. We're bouncing off support. So we may still see higher highs, but right now, short term, we've formed a minor top. So what are the upside targets? What you do is you look at the last reaction highs. That's this one here from February, from the 6th, that's Thursday, February the 6th. That was made at, I believe it was, let me just click on it, 8,770. And then the next one is 8,837, our record high. Now, for the bear short term to be in control again, we would have to fall through Friday's low at 8,702. That would break this uptrend line and could indicate a slide back down towards the previous support resistance area, which is now, because of inverse polarity, a support area. And these are the late January highs around 8,590 or so. So that is a possible scenario. But I know a lot of traders have sold into this rally in the FTSE for the last few weeks simply because they made an all-time high and because people think, well, the UK economy is not doing that well. But actually, if you think about it, the FTSE 100, most of its constituents make about 80% of their profits from abroad. So from outside of the United Kingdom. So therefore, only 20% of their profits come from the United Kingdom itself. So you can't always just equate the economy of a country with its stock market, which brings me, before I answer more questions, to the German stock market. I mean, the German stock market, we've been in recession in 2023. We've been in recession in 2024. This is our 3rd year, 2025, where we might see another recession. According to a lot of German institutes, it looks as if we're going to head into another recession this year, which could even be worse than the previous 2 ones. And this 3-year recessionary spell, if we do see it, would be the longest seen since the end of the Second World War in Germany. And despite that, You have the DAX 40, the German stock index, making record highs. Last week we saw 4 consecutive record highs, and you can see here that today we've just made another one. I mean, the stock market is just extremely bullish. And why is this going on? But again, most of the German companies, as you may well be aware, are exporters making their money abroad. And the weak euro over the last few months has helped German exporters to export more of their goods. And basically, despite the country being in recession, only, let's say, a mild recession. I mean, we were, I think, 0.3% down previously. This uptrend in the share price of in the DAX 40 is due to the fact that basically investors are rotating still out of very expensive US stocks, which are, from a PE ratio, overvalued, into at even these levels, undervalued European stocks such as the German stock market, which is why you had the FTSE 100 making all-time highs, the German DAX 40 making all-time highs, and also the Euro Stoxx 600 making all-time highs. And what's interesting as well, a lot of people haven't spoken about France recently, but if you look at France, I mean, France is playing catch-up big time. Look at France. I mean, this is also a very healthy uptrend. And basically, the CAC 40 is really rallied very strongly from its lows back in November of last year and in August of last year. And we're heading back up again towards the highs seen in April and May, which may act as resistance around 8,260 or so. But the uptrend is very strong. So French equities also being bought. In Germany, obviously, we have elections coming up on the 23rd of February, but these usually do not tend to change much with regards to the stock market. But enough about that. Let me answer some questions. Ollie Oy said, can you look at the Hong Kong Tech Index? Let's just do that together. And let's just look at Hong Kong Tech. If you send me questions, it's always useful for me to know if there are any particular codes. I mean, Hong Kong Tech is easy, I can just type it in. That you just give me the codes also for the day. All of this positive momentum here is feeding through the stock market in Hong Kong, especially the tech index. And you can see here we've taken out the high seen in October. And it looks to me as if today, we'll see here with the close, if that ends up being above the October high, then that is very bullish. Short term, we've got this doji formation. So we have to see whether we can see ideally another day above that October high. Because of the doji, I just want to be sure. But what we can see here is a long-term bottoming formation building, and we are now breaking out into what could potentially be a long-term bull market. Why is it a bottoming formation? Because if you go back to February of last year, you can see here all these highs since then, including the high made in October. And sorry, this is actually going back to 2022. They were made in this sort of area, and you can see here that we've broken above the highs seen back in June of 2022, and now more importantly, the high in October of last year. And that to me tells me that we're forming this reversal to the upside very likely. Now we've got really important resistance coming in here at these lows going back to August 2021 and October of 2021, which take us back towards 5,820. So that combined with these highs going back to January 2022 at 6,013. So basically this whole area between 5,770 and 5,613 is very strong resistance. So we may stall there in the next few weeks or months, but once that's taken out, it's quite possible that we're heading back up again towards all these highs and lows seeing back to December 2020 and basically May 2021, which come in around 7,430. So there could be quite a lot of upside still with regards to the Hong Kong Tech Index. And you can see here that we are now on track for our 6th consecutive week of gain. So again, if you look at momentum, momentum is bullish, it's pointing higher. Now, David Boyce asked me what do I typically do with setting up stops before earnings calls when things can get very volatile. Well, first of all, what you will notice is a lot of times, David, what tends to happen is that the stock markets, in most cases, the stocks will already point in the direction the earnings are going to come out. And that's something that happens most of the time. So let's look at, I don't know, any stock. Let's look at, I don't know, Meta, for example. And you can see that the trend is already in place beforehand. And obviously Meta has been doing extremely well. But here, if you look at earnings, when were the last ones? Yeah, we don't have them on the chart. But anyway, imagine you have earnings in here somewhere. I can't exactly remember when we had the Meta earnings out. But if you look at the trend, what you need to do is obviously give yourself some room, because there might be a lot of volatility. And you talk about 5 to 10%, but sometimes stocks drop 20 or 30% around earnings, or rise that much. So we saw that with Nvidia, and their stocks rising, the share price rising very, very rapidly after earnings. So what you tend to do is to widen your stops in that case. If you have longer term positions on, I mean, it all depends on our time frame, but if you have long term positions on, what I would do is probably move my stop to a closing basis. So that's the risky bit here, because basically, imagine we are trading here. Oh, thank you. The galley was just telling me 29th of Jan was the earnings. So let me just go back onto the daily chart. Thanks, guys. So 29th of Jan. So here, that's why we had this volatility on that day. So yes, good question. So how do you manage that? Imagine we're trading here. We don't have the earnings. This is before earnings. So we had already a move to the upside out of the sideways trading range before earnings. So that was basically investors and funds getting long ahead of the earnings, anticipating that they're probably going to beat earnings again, etc. So for that reason, the trend was up. So if you are long in that case, well, where do you place your stops? Well, you want to give yourself room. So if you look at the last reaction low, this is the low here on the right-hand side. What I wouldn't do is just place a stop loss below there, but ideally below the next lower one. And can you see here, just below that mid-January low, we had all of these lows going back to December, which are only fractionally below that low here. So if you use an intraday low, just a stop loss as your level, I would place it quite far away here below the late December low, just to give yourself room in case you see this sort of volatility. Now here in this case, it didn't take you out. So that's really good, no problem. If you wanted a tighter stop, perhaps the previous relative low, the first one, could have been a potential one. The risk you run then is that as earnings come out, you get this huge spike in volatility. You may just short-term be stopped out, and then it might go in the direction you were in beforehand. So that might be tricky if you just use a stop loss just like that. If you use a stop loss on a daily chart closing basis, so you want to see a daily chart close below that previous low, then obviously they run the risk that perhaps if earnings are very disappointing, you could end up much, much lower. So that's a tricky one, and it depends on your strategy, how you manage your risk. But some people do that. I mean, for example, funds, etc., won't just trade on the intraday levels. They look at where the market or the share price closed on a daily basis, and sometimes also on the weekly basis before making a decision about their asset allocation. Now here, in this case, the earnings came out, as we just said, 29th of January. Then we traded sideways, but the uptrend was already in place. And then since then, we've just been grinding higher. So the Meta share price continues to rise. So I hope I've answered your question. It's a tricky one with regards to earnings. Ideally, you want to be in a position well before earnings, because you're already trading in the direction of the trend. And therefore, you have more of a buffer with regards to your potential stop. Because imagine you're long down here, what you could have done ahead of earnings is perhaps just say, okay, fine, I'm just moving my stop to my entry level. If you make it a guaranteed stop loss with IG, you can do that. You can guarantee your stop loss, so you'll pay a wider spread if it gets stopped out. But if it doesn't make any difference. You're not going to pay anything. But if you have a guaranteed stop loss, if the earnings were to disappoint, for example, and you would get a very sharp move, let's say, I don't know, 15-20% down in Meta, it would be IG taking up that risk on your behalf, and therefore you need to pay a wider spread when that stop gets triggered. But obviously you don't place that stop 2 or 3 days before earnings, because then the volatility becomes much wider. But you do that sort of a month before, etc., because then the spread will be less wide. So yes, the earlier you get into a long-term position ahead of earnings, the better. That's basically what you need to do. Now, the question you asked, David, is there percentage of room you would widen it to? Yes, well, you need to look at the underlying volatility of the asset you're looking at. So let's look at Meta. What I look at is called the ATR, the average true range. What it does, it looks at the last 10 days usually of the day's ranges. And basically, if we look at the average true range, let me just do that here. It's the first one up here, average true range below Aaron. And you can see here, it gives you this graph. And it tells you, this is over the last 14 days. So I set it to 10 days. I find 14 a bit too long. And what you do is you see here that here the average for this financial, let's talk about the bet to make it simpler on Meta and not the share price itself. So here the spread bet is 73,677. The average daily move at this high here was 2,900 points during the day. The average then today is 2,000 or just below, 1,978 points per day. So what you can do is around earnings, use a wider average true range. So if the average range is that, and you have earnings out, well, you can then say, for example, okay, I'm willing to risk maybe 1.5 times my average volatility, or maybe even twice that average volatility. And then you look at that. So in this case, if it were today, for example, earnings, what we would say is, okay, 2,000, I would be willing to risk 4,000 points here. So from 73,677 to 69,697. So just below here. Personally, I wouldn't do it on average true range for that. I would look at the last reaction low if we were to have earnings here out today, which would be these ones. And if I could, I would probably use the next lower one here. Just to give myself more room. But since that one is close to these previous highs, it may act as support. So if you can put a slightly lower still down here, it would be even better. But obviously it all depends on what your risk profile is, what you're comfortable with, and how long you want to run your positions. So just be aware of that. Now, talking of average true range, I want to show you something else. When people try to trade intraday, for example, that need to take account of the underlying volatility. So if we go back to the FTSE 100, for example, we can see, imagine we're spread betting the FTSE 100 on an intraday basis, let's say on a 15-minute chart. So today it went higher, it just broke up, it still goes up, it's bullish, and we've seen this up move, it's all good. Now, if you want to make, let's say on the FTSE, 50 points a day and say, okay, that's my profit target. If I make that, I stop trading for the day, that's great. Then, you would have to, for example, this morning, if you bought it at 8,725, let's say, then you nearly made your 50 points here. But does that make sense? So what you need to do is actually look at the average true range. And if you look at the average true range, you will see that the FTSE actually, on the daily chart, so you don't look at the intraday chart you're just looking at now, but on the daily chart, it will move 70 points per day on average at the moment. So if you're trying to make 50 points when you have a 70-point range, the odds are pretty low that you're actually going to get it, because you need to be within the top 10 points of the top and top bottom points, 10 points of the bottom to get your trades out. So what I tend to do is try, if I were to trade intraday, try to make maybe a third of an average true range. So if it's 70 points, what you're trying to do is make just above 20, 22, 23, 24 points maybe in that day. So the probability of getting 24 points within their 70 points average range is much greater than trying to make 50. So bear that in mind as well. I'll answer more questions next week when we look at technically speaking, but thanks a lot for joining me today. I hope you've learned something useful. And for those of you who asked your questions, thank you very much for sending those in, and I'll see you next week. Bye.
Stocks ignore the tariff news.